A very important time of year when it comes to Canadian politics. This is the federal budget. Very, very important. It tells us all about what the government's priorities will be over the next year. Plus, it tells us about how the Canadian government will spend taxpayer dollars, and also how the Canadian government will spend dollars that aren't directly from taxpayers, but instead are from taking on additional debt. Now, this is projected to be one of the most consequential budgets of the past 15, 20 years, many people will say, because of the size of the deficit spending, but also the size of the investment, depending on how you frame it. Mark Carney and Francois Philippe Champagne, the finance minister, say that, yes, this is the highest spending budget outside of emergency crises that we've seen in quite a long time. But they say that a lot of this spending is going towards an investment in the Canadian economy and Canadians' future. Now, different people will frame that differently. They say this is going to create a huge amount of economic growth in Canada. It's going to grow industry. It's going to further spur on the Canadian economy. Other people think a little bit differently. Let's tune in now. We see Champagne and Carney here starting to talk about what is upcoming. This isn't the presentation, but here are some comments. Let me go in here and I'll show you what I'm currently seeing.
So, Minister, this is an historic day, and it opens up a new era for the country. You will be presenting an ambitious budget.
This is, in many ways, a historic day. We're starting a new era. We know the world's changed. Our strategy has to change with it. And we choose Canada. We choose to advance. We choose to invest. Historic investment, generational investment, everywhere from new partners abroad right down to new infrastructure at the local community and, of course, millions of homes across this country. Congratulations. Merci beaucoup.
Well, thank you, Prime Minister. As the Prime Minister said, this is an investment budget. This is a generational shift. This is not just an ordinary transition. We're going to build this country like never before. We're going to protect our sovereignty. We're going to empower Canadians on the shop floor, in the fields, in their homes. This is really a generational moment. So thank you, Prime Minister. Thank you for your vision, because that budget really will give a roadmap to this country to attract more investment, to be more prosperous, more confident. So, merci, Monsieur le Premier Ministre. C'est un plaisir d'avoir.
Thank you, Prime Minister. I'm very pleased to have the opportunity to present this budget. This is an historic moment for us and for the country. We're talking about generational investments, as the Prime Minister said, in our infrastructure and in productivity and competitiveness for the country, and of course, affordable housing. So I'm very pleased to have this opportunity to present the plan to Canadians, and I think everyone will see their interest in this budget. Only some 25 minutes left before your speech, and we get the numbers.
It's a crucial time for the country, and I think it's not just that, as you just said, all Canadians will see themselves in the budget because it will help them all, but in many respects and at its core, the budget reflects Canadians. Because the thing that struck me, I think struck you, as we went across the country from early in the year, Canadians wanted to come together, want to take control of our futures. That's what this does. This gives us control of our future. We're going to build together. We're going to build Canada strong, and we're starting right now.
Totally.
Merci beaucoup.
So we're ready. Merci tout le monde. Merci, Monsieur le Premier Ministre.
Can we get a photo with the budgets?
Sure.
Absolument. Yeah.
Okay, so we see them going in here for this photo op. If they seem to be talking more, I'm going to flick back to this. We're expecting the big budget speech here in the next 20 minutes or so from Francois Philippe Champagne, the current finance minister in the Liberal government. So interesting stuff coming out of that little preview there. Much of the same framing that we've seen over the past couple of weeks, which we'll talk about in a second. If you're just tuning in, let me know that you're here. Drop something in the comments and let me know where you're tuning in from. We like to see if we can get representation from all different parts of Canada. So it's very cool for me to sort of see where you're tuning in from. So interesting stuff there, the way that he's framing it, saying we talk to Canadians and they want to build Canada. I think that's something that everyone can agree on, and that isn't too dangerous to say politically, is that, hey, everybody wants Canada to grow. Everyone wants Canada to do better. Now, the interesting question here is more of a philosophical and more of a worldview question. Are you somebody who believes that politically more government involvement in the economy, even if that means massive investment into infrastructure, do you believe that that can adequately grow the economy over the long term, and that it's worth the risk of taking on the debt that is required to do so? Or are you someone who looks more to the side of markets and reducing regulation as a way to spur on more productivity, more GDP growth, and economic growth across the country? This is really what it comes down to in my mind, the sort of clashing of these multiple different ideas. And it may be clear to you which one will win and which one is the better one, but I think that there are reasonable ways that you can argue for either. Let me just show that we've got more things going on here on the other stream. We're going to keep this up so that we can get into the speech as soon as it comes in. There are arguments on both sides. We look to other countries that have massively grown their economies over the past 15, 20 years by doing incredible amounts of government spending. You look to China and you say, okay, well, you can have many problems with the way that their government operates. It's one party authoritarian system, right? There's no political opposition there. But as a result, they've been able to make huge investments with no opposition, no control in the eyes of the people, but also have created a lot of economic growth there. So there are reasons to believe that, okay, this type of spending could be good for the economy. But on the other hand, there are some major risks at the same time. And if you've been following on the channel, you'll have no doubt heard me talk about this. The concerns around the additional debt that we're going into, the additional spending that is happening as a result of this. You can look at it in many different ways. The way that I look at it is in the context of what happened during the pandemic, when we had a whole lot of government spending at a time when there wasn't enough demand in the bond market. The way the government funds this additional spending, it's not out of tax revenue. It's not some way that they can just generate this money from Canadian citizens. No, they go into debt. But who do they go into debt to? They go into debt by selling Government of Canada bonds, these IOUs that investors will buy, major pension funds, major investment funds, but also sovereign funds. Other countries will buy Canada's debt, and they buy it because these things are like IOUs. We'll give you $100 today, and 2 years down the line, you're going to give me those $100 back, Canada, but also with an interest rate. You're going to give me back $115, $120. That's why people buy these bonds as investments. That's what the government's going to need to do, is sell a whole lot of bonds to raise this money. Now, that's all well and good when there is demand in the bond market, but if there's not demand in the bond market, then, well, we could find ourselves in a tricky situation when it comes to the federal debt. We saw this during the pandemic. There were no buyers of these bonds. There were no buyers that could sustain the level of bonds that we were selling. I worry that taking on this additional debt means that we open up risk in the future that there will not be enough demand in the bond market to sustain the levels of debt that we have. And what happens then? Well, you turn to the lender of last resort. Who will buy these bonds when no one else will? And we saw during the pandemic that is Canada's central bank, and they buy it by printing money to allow them to do so. That was quantitative easing, something that was effectively done in the pandemic to prop up the economy. And I worry about the downstream impacts of that and the chances that this could happen again. I think it's driven the wealth gap further and farther, helped out corporations a lot more than it's helped out average Canadians. This is the way that I frame things and the way that I think about what's going on here. Let's tune in here and see what the discussion is on some of these different news sites. We'll take a look here at CBC first, but we're going to be flipping around to get different coverage as we go.
If that's going to tackle like students specifically, you know what I mean? Like, yeah. I feel like, yeah, like housing is a crisis that we are all facing as Canadians, but at the same time, like I was talking to my roommates, like we're competing with people that are earning, that are able to work full time and are earning way more than we do. You know what I mean? Sure, like we're earning the minimum, the student minimum, and then we're having to afford $3,000 houses or rent at this every month.
Yeah.
You know what I mean?
Camilla, yeah,
So,
I get it. Yeah, and it sounds stressful and probably not like a stress you need as you're trying to get through university. But thank you for telling us about it. We appreciate.
We've seen this a lot from the CBC over the past couple of days. In all of their commentary on the budget, they've been bringing in young people, framing this as something that will impact young people far more than it will other groups. And because of the debt that we're going into, people are concerned, will this budget help young people or will it hurt young people in the long term? Now, they've brought on multiple different people with multiple different opinions, and I've been impressed by that. A lot of people saying, yes, we need to invest to create more jobs. Again, the worry on my side that I feel like is not being adequately addressed is the possibility of driving the wealth gap further, making it even harder for young people to get started because they don't have these assets that tend to grow in value when you have this kind of monetary debasement, which I think the chance of that happening again in the future increases as we spend more.
Carney, the first budget from his government, which we are expecting to be substantive, both in terms of spending and in terms of the deficit. Rafi Boudjikanian and Nisha Patel are joining me now for a last thought before things get underway. Rafi, I'm going to start with you. You were with the Prime Minister in Asia over that 10-day trip. What's your sense about how focused they were and are on this document to sort of set the trajectory of the government going forward, if they survive, of course?
If they survive.
Yeah.
Very focused. I mean, both publicly in the remarks we were getting from Prime Minister Mark Carney and other ministers, and also privately, you could tell behind the scenes, those Prime Minister's office staffers, they were bleary-eyed. I mean, we would see them at breakfast sometimes just hunched over their laptops, not really talking to anybody. You really had the sense that they were working on this thing up to the last minute. And, you know, keep in mind how this trip was kind of overshadowed by the halted trade talks with the U.S., right? Yeah. I mean, Carney spoke to U.S. President Donald Trump. At one point, journalists were asking the Prime Minister, well, what is your plan now? Because it looks like those halted trade talks are not restarting. And Carney would say, well, the plan is the budget, really kind of pointing people toward this document, toward today.
Here comes the Prime Minister now. If we can just pop that up while you're talking, Rafi, as he makes his way inside the House of Commons.
Of course.
I saw some of his staff members, so he will be shortly following, I'm sure. There he is, with François-Philippe Champagne. Maybe we'll just listen.
Floor crossing to your government. What do you say to that,
A budget
sir?
that everyone can support. A budget for the country, for the moment. This is generational. Couldn't be prouder of my finance.
We're ready. We're ready.
Okay,
You know, an investment budget, des investissements générationnels.
Okay, so they're calling this an investment budget. This is a very interesting.
The theme of the budget, or the title of the budget, there always is one, Canada Fort or Canada Strong, which isn't surprising. That's been much of the language
campaign
from the Prime Minister and his government since being elected. Nisha, sorry.
So they bring up an interesting point here, the panelists. If you haven't already heard, there's also a political aspect of this as well, above and beyond the financial framing of this, and that is the possibility that this budget could send us into another election. The Liberal government is short a couple of votes. Now, when the budget is introduced today, we'll have a chance for the opposition parties, the Conservatives and the NDP largely, to read through this and determine will they or will they not support this budget. Now, budget votes, voting on the Ways and Means motion, I believe is what it's called, is usually considered a confidence vote. If the Liberal government can't get this to pass, well, then it can be grounds to trigger an election, a vote of no confidence, if you will. Now, I don't think that many Canadians have the appetite for an election right now, and I don't think that for a lot of people it would make sense politically to have an election right now. Now, of course, the Conservatives won't want to support this because they largely take on the worldview that there should be less government intervention in the economy and that there should be less spending in the economy as directed by the Canadian government for some of the reasons that I've mentioned here, making the arguments on both sides. The NDP have also said they're not certain that they will support the spending either. One of the points that they're saying is that, are we really sure we want to be putting billions and billions of dollars towards additional military operations?
Budget
additional. Okay, my bad. I've got another tab open here.
Sachedina
okay, there we go. flip to that so you don't hear double talk on here. But people talking about, will they vote for this? Because it really is an indication that there will be additional military spending. To a certain extent, I think it's good to have a Canadian military, but I also worry that a lot of this spending, these new spending targets, will flow more into the pockets of the U.S. military industrial complex, as Canada sort of has yet to really get a military industrial base off the ground. So I see legitimate criticisms for that, but it is also true that we haven't hit our NATO target spending, which is part of the agreement of being a NATO member nation. Yeah, Gravity Gaming, GG, ETA until speech. I think we're minutes away. Carney said about 15 minutes, about 10 minutes ago. So I'm thinking over the next 5, they've targeted 4 p.m. We're gonna see that really soon. Again, if you're just tuning in, thanks for joining us. Subscribe to the channel if you haven't already done so. Drop something in the comments. There's a lot of streams that you can be on where there aren't comments allowed. We have open discussion here in the comments, so I appreciate you all joining in. Let me know what you think about what's going on. What do you think is going to be inside of this budget? Of course, we're going to listen to the budget speech today, but we're also going to go over some of the finer details of the budget as the budget speech actually occurs. Usually what they do is release the budget digitally online. So if you're sitting at your computer, keep an eye out for that just as the budget speech begins. I'm going to pull that up on my end, listen to what Francois Philippe Champagne says, but also read into some of these finer points. There's likely going to be a whole table of contents of all the different plans, all the different areas that this spending will be happening, where the investments will be happening, what the dollar amounts are. I'm going to highlight those for you afterwards as well, some of these top priority items. Now, interestingly, in previous budgets, they haven't included things like the immigration numbers, which is something that's going to be announced in this budget, something which is unprecedented, but one that is really going to have a impact on the future of Canada, of course. Okay, and we're going to tune in now because the budget speech is occurring at this moment. Let's tune in. I'll speak with you shortly.
To table Budget 2025. Remember, we haven't seen a budget in an awfully long time. So this will also give us a good sense of the country's finances. As soon as this starts happening, David Cochrane, who's sitting here beside me, will take us through what's in it.
Standing Order 83-1, I would like to table in both official languages the budget documents for 2025, including the notice of Ways and Means motion. The details of the measures are contained in these documents. Pursuant to Standing Order 83-2, I am requesting that an order of the day be designated for consideration of these motion, Mr. Speaker. And with that, I will give that to the clerk. Here.
Just cut the audio. They must have like a noise gate on it or something like that.
Monsieur le Président, honorable député de cette Chambre, chers Canadiens, chères Canadiennes, le budget que je présente
Okay,
aujourd'hui
the finance minister is on his feet, and he's going to take us through his speech, which we will dip into. But first, let's bring in David Cochrane, the host of Power and Politics, who has been in the budget lockup and will take us through the highlights. David.
Yeah, here it is. It's called Canada Strong, Budget 2025. You can see all the tabs I've made. There's a lot in this, Rosie, including a big jump in the deficit.
Okay, so we know what to expect here. Let's listen to these highlights and then we'll switch back over to that speech.
Through the numbers. The big number is the deficit this year. It is $78.3 billion. Now, that's not the $100 billion some people projected, but that's a heck of a lot higher than people are used to seeing in a non-COVID year, and it stays at an elevated rate in all the years after this, going out until 2030. You can see the $78.3 billion this year. It's going to be $65.4 billion next year, $63.5 billion the year after that. Just shy of $58 billion and just shy of $57 billion by 2029, 2030. Broadly, Rosie, this year and the next couple of years, the deficit is twice as high as we would have seen in the fall economic statement that Chrystia Freeland tabled in December, and growth is half of what was projected just 9-10 months ago. Now, you're at that deficit despite there being some significant cuts and downsizing in the size of the public service. There is going to be a net overall reduction in the size of the public service of nearly 10%. In this year alone, you're looking at 16,000 full-time equivalent jobs being eliminated, and that will go to about just shy of 40,000 jobs being eliminated by 2028, 2029. In effect, what's happening is the civil service is being right-sized, to use the government's phrase, from its high of 368,000 people in 2023-24 to about 330,000 in 2028, 2029. That's the spend less so you can invest more. And on that, there is a series of investments in capital in particular. $115 billion towards infrastructure, $110 billion in productivity and competitiveness. That includes some tax incentives to get people to invest in equipment and in buildings. $30 billion in defense, just in capital in defense, Rosemary. There's a total of about $80 to $90 billion in defense over the next 5 years, a historic level of spending there, and $25 billion in home building. This is mostly the Canada Homes announcement that was made a few weeks back. To give you a sense of what is shifting here, program expenses normally grown by 8% a year is now growing by less than 1% a year in this budget. Is shifting to capital. They're also going to try to bring down the population of the country by reducing the immigration targets. Permanent residents down from 395,000 to 380,000. But look at temporary residents. This is students. This is temporary foreign workers, a massive reduction from 673,000 down to 385,000. And one last thing to highlight, Rosie, and we can go through any of these measures as you so choose, and this is the climate competitiveness strategy. The emissions cap, it's on the books to be scrapped. It's essentially, there's a couple of conditions that need to be met. They need to finalize the methane emissions reduction.
So very interesting stuff here. Thank you, A_L for the support. Huge announcements inside of this budget. We've got a now confirmed, people were saying anywhere from $70 to $100 billion of deficit. We were saying that was likely. Now we know $78.3 billion in this fiscal year in new spending, $65 billion next year, and over $50 billion every single year until 2029. Of course, these are targets. It could be higher, could be lower. My guess is that with this this strategy of going towards more government involvement in the economy, in trying to spur growth in the economy, it's likely that those numbers may be revised upwards. Additionally, public sector jobs cut. Now, this is more aggressive than Pierre Poilievre's campaign announcement that he was going to have a lot of jobs cut, but it was going to just be via attrition, via people retiring. This was the former idea in terms of how the Conservatives would deal with limiting the growth of the federal government. Now, Carney is saying 16,000 jobs will be cut this year. 16,000 jobs will be cut this year, which is an interesting thing because, again, this is more aggressive than the Conservative plan as per the election campaign. And many people said that Poilievre lost his riding because there were a lot of federal government employees inside of that Carleton riding who thought that he was going to be more aggressive in terms of cutting the federal government. Turns out the Liberals are going harder there. Now, one interesting thing to talk about here is the difference between capital spending and operational spending. A big thing inside of this government's plan saying that, okay, we're going to lower the amount of spending that the government does on a day-to-day basis, these operational spending. That's what this employment is part of, limiting that and shrinking that. But we're going to drastically increase the capital expenditures, the investment spending. Now, my personal worry here, I'm going to keep an eye on it over the coming weeks, is that are you really limiting the growth of a government if you are now creating new agencies that are under the purview of this capital expenditure, creating Build Canada Homes, creating the National Projects Office? Will we just be shifting these jobs into something that we can now call capital spending rather than operational spending so that we can make our government look like it's on a fiscally stable route, while meanwhile you're just shifting the paying of these people into capital expenditure bureaucracy rather than bureaucracy that is categorized in operational spending. Does this make sense? Let me know what you think.
workforce renewal and what they call the CER process, which is the cost efficiency review. And that was defined essentially 15% in every department that could either be eliminated or reprofiled or moved to another department. And it's not going to be a straight across the board 15% everywhere. Some departments are going to get hit harder than others in these changes. But what's interesting, Rosie, is that with the workforce reduction, they say they can do a lot of it. The 16,000 full-time equivalents in this year, decline of about 40,000 between 2028 and 2029. There's going to be an early retirement incentive for people, 50 and up in different groups. It's too complicated and long to get into here, but essentially you'll be able to go take your pension early without penalty if you qualify and hit these targets. So this is a way they're looking at reducing the size of the civil service without direct layoffs.
Okay, let's thank you so much for that, David. We'll take a minute and listen a little bit to the Minister of Finance and come back.
Needed for Canada's future. We chose a different path, Mr. Speaker, a path that believes in Canada, a path that invests in our country's future, a path that reinforces Canadian values, a path that makes us less resilient on our trading partner, a path that allows us to be master in our own house, Mr. Speaker. We chose Canada. Every member of this House will choose Canada as well, Mr. Speaker. I hope they will all choose Canada, parce que nous voulons tous et toutes être maîtres chez nous d'abord, Monsieur le Président.
Parce que nous croyons tous et toutes dans le Canada, Monsieur le Président. We all believe in Canada, Mr. Speaker.
Mr. Speaker, when our steel, aluminum, forestry, auto, and agriculture industries were hit by U.S. tariff and trade disruptions, we did not stand by and wait for the storm to pass. We stepped in with the most comprehensive set of trade resilience measures in Canadian history, because this is who we are as Canadians, Mr. Speaker. This is who we are. When times get tough, we stand together, because we are Canadian. The government launched... The government launched the Strategic Response Fund that my colleagues have been leading, allocating $5 billion to help sectors impacted by tariffs to adapt, to diversify, and to grow.
Let's get into a little bit of analysis here, and we'll tune into the speech here and there as it goes, because this is a lot of framing, a lot of posturing. The government, of course, trying to frame this as them choosing Canada. Also, politically, this is an advantageous way for them to frame this, because, well, they need to get this passed in a vote. And if they say, well, we're choosing Canada, we are building Canada strong, well, then any opposition from the Conservatives, from the NDP, any issues that they have with any items inside of this budget, they likely will say, well, you're not choosing Canada, you're not acting in Canada's national interests. Of course, it's reasonable to say that there are different views of what is truly in Canada's national interest. Is it more in Canada's national interest? Will we get better results from this $70 billion or $78 billion deficit spending? Will we get better economic results, better results for average people, better results for average Canadians from the government making these massive investments? Or would we have better results in terms of job growth, productivity, if the government were to say, let's get out of the way a little bit here, let's change regulations? Of course, there's always a role for government in terms of reducing monopoly, making sure there's fair competition inside of the economy. I think that that's a large role for the government, but I think it's reasonable to say, well, reasonable people could disagree on the end goal here, on how to get to that end goal. Is it through this billions of dollars of centralized government selection of where in the economy this money should be spent? Or is there better to trust in markets, the government get out of the way, and have the economy grow through those means? Reasonable people can disagree on these ideas. Let's listen in here, and we're going to take a look in at the Canadian dollar and the bond market as this is going on.
Be a cut,
Yeah.
but I truly believe that these cuts are drastic. I believe that there should have been more work done and consultation done before such an announcement is made.
It does sound as though there will be, according to David, an attempt to push.
I think that's their audio. Let's flip over here to CTV and see what the commentary is as we speak.
Growing the economy over the mid to long term to buttress some of
it might be
the
me.
hits
Hold
that
up.
the economy is taking right now.
Let me do a little audio reset here and we'll get this going.
And might in the future.
Okay.
You mentioned you identified productivity as key to that growth. The budget does the same thing. And they've got something in here called a productivity super deduction, basically a suite of tax measures aimed at creating that kind of growth and spurring productivity. Based on what you see and what they have outlined there, do you anticipate that will be the case, that will happen?
Well, productivity is really a major complex issue that nobody can really figure out exactly how you can actually do something to raise it. We have done all kinds of things over the past 20, 25 years to help increase productivity, including tax cut and other measures for businesses. It's a tough one to figure out and predict over time. They're doing the right measures to incentivize. If the firms come in and actually invest $500 billion over the next 5-10 years, yes, that will certainly increase productivity. But again, it is an if there. If what we have done here is sufficient for getting the private sector to come in and invest. And that is really the issue. But in principle, on paper, these are the measures that they needed to introduce and implement and see what happens. I don't think anybody can say for certain that productivity is going to increase and by how much. None of us can say that.
Is there any way to know if that private investment will actually come? Like they're saying very conclusively, this will lead to $500 billion of additional private investment over the next 5 years. Is there actually any way to know that?
Not necessarily. I mean, if all the measures that they have introduced, if they implement those and go through it, and if private sector does not actually come and have enough confidence in the Canadian economy to invest in Canada, then we are in real trouble. Because that means essentially there is nothing the government can do really to incentivize and encourage private sector investment. But I think we have to sort of hope and accept that in principle those things should help investment in the
Along these ideas, one of the criticisms of the major infrastructure projects that have been going on in Canada as a part of this increased spending, you have this national projects office that's been opened where the government has selected, here's the projects that we are investing in that are in Canada's national interest in terms of growing the economy, building infrastructure. Okay, they say that this was going to flood in massive amounts of private capital. Although reports from Desjardins recently have said, well, actually, this lack of clarity around how the government is choosing the winners and losers, the people that will be funded, the people that will get by some of the regulation that other players will have to still deal with. They say that lack of clarity actually could make this less of an attractive environment for private capital to come into because there's not an even playing field. There's not there's not an equal opportunity here for different people to build infrastructure to invest in Canada because they say, well, like, why should I invest in this company if I'm not certain that it will have the eyes of the government on it enough that they will be able to bypass these regulations? And if they can't bypass these regulations, then how are they supposed to compete with the industries and the companies that actually do get this leeway?
As a military leader myself, there's one thing that the leadership team is going to care about, and is this sustained investment over the next 5 years? And it looks like it is. The reason I say that is when you set a budget, the military with the deputy minister will go ahead and give you the maximum amount of military capability that they can within that budget. But then as we've seen over the recent years, 5 to 10% of that budget has been retrieved and taken back to work against the deficit. And that's so critical. There are no off-ramps. So that money, if it is sustained, is going to be extremely important in carrying defense to a new place in many different ways.
General Lawson, what do you see as some of the major gaps? Because Annie Bergeron-Oliver mentioned in her budget item, when you look at things like submarines, I mean, there's still no money to allocate, that cash for 12 submarines. Each of them costs about $1 billion each. Seeing that gap, is that concerning for you?
Well, not really. Those very large procurements are amortized over decades that they're going to be in place. They're very, very expensive in accumulation. But I think what we're talking about here, first and foremost, and the government's given us some indication of where they want some of this money to go, they're recognizing that first and foremost, once this is a sustained amount of money over coming years, the first thing they need to deal with is people. And a couple of years ago, one of the defense ministers said that the Canadian Armed Forces were in a death spiral. A little bit of good news, they're no longer in a death spiral, but they're just kind of pulling out. This will be the first year in years that they're actually going to take in more people than they lose. But that's not good enough. They need to recover 10 to 15,000 people, and now there's talk about a reserve that would increase from 30,000 to 10 times that number or more. And for that, you need compensations and benefits and housing like the Auditor General spoke about, and we need to feed into these bases, the 30 bases across Canada that have.
So interesting conversation here about the militarization of Canada, the growing of the military and the massive investment into the Canadian military. What I want to also talk about here is the impact that this announcement is having on the Canadian dollar. Now, of course, you can't say that this is entirely the effect of the Canadian dollar, but we can take a look at this nonetheless, and we see the Canadian dollar down 0.33% on the day, with this continuing to go down over the past 20 minutes since we've gotten some of the details of this budget. Some people will say this points to the credibility of the Canadian dollar, and this mostly people will turn to central banks and say, okay, if banks start printing, if they lower rates faster than other countries, well, then the release valve is the Canadian US dollar exchange rate. This could be pointing towards more people saying, okay, with this added spending, there's going to need to be more bond market issuance, more bond issuance, and that could lead to degradation in terms of the value of the Canadian dollar over the long term. Now, I'm not sure how long these trends will play out, right? We've seen a lot of movement in the Canadian dollar over the past year, over the past 5 years. It alters, changes a lot, and how much this is tied to any individual, one individual event is hard to say. Now, we can also look at the Canadian bond market as a representation of the opinion of the market on this. You would, if we were seeing, this is just my base analysis of this, but this is the 1-day chart, I believe, how the bond yields have been impacted, and we see here a dramatic decreasing of yields, which is something that you may not expect as there's an additional spending announced. But this may be a reflection of the higher spending that was expected. $100 billion in deficit spending was some people's expectations. We see $78 billion actually announced for this year, meaning that the bond market could have already priced in the $100 billion or higher and seeing, okay, there may be less bond issuance than we actually had thought, and the yields go down as a result of that. That's my initial take on exactly what is going on here. Let's tune in.
1,000 employees, so a reduction of about 40,000 from peak. You mentioned a 70,000 number. This is.
By the way, if you in the chat are checking out the budget and you found that PDF somehow, let me know. I've currently been going here to the Department of Finance Canada's webpage, which has been down over the past couple of minutes here. Not finding this PDF yet, but I would definitely want to dig into that as soon as possible because that's where we get the specific details. Absolutely.
Strained.
Right, but the public service did get large, particularly during the pandemic, and the government's point is this is bringing it back to a size that is more manageable, given that taxpayers are paying for the public service.
Without a doubt, but what they want is services right now when they are in a time of need. They truly believe that the services will be impacted by these cuts, and I have to say I agree with them. And my only concern is we have a lot of challenges coming our way. And when we're talking about transformation and this innovation that they want Canada to be in, it's great, but it's federal public sector workers who actually do that work. And so when we're talking about streamlining, we're talking about infrastructure, we're talking about transformative public services, this is great. But every department and agency actually connects with each other. And so right now, with the blanketed announcement,
I'm seeing here, Brandon, no, I can't see the link that you may be putting into the chat. I haven't been able to, maybe it's been, YouTube's sort of blocked it out, but I'm looking for the PDF here and still am not finding it. Maybe you can tell me what you searched to find it. I don't know if that lady was the public sector union head or something like that. From the way she was talking, it certainly sounds like something like that. Really upset with these cuts. Now we've got some reactions from Elizabeth May. It seems like the most controversial thing here is not the spending, but is the public sector changes that have been announced.
Project, while owned by OPG, the companies that will benefit are General Electric and Hitachi and Kiewit Engineering from the United States and some Canadian engineering, of course, our old friends Atkins Realis, formerly known as SNC-Lavalin, and Aiken. But this is for a project that may never generate a single kilowatt of electricity because it's an experimental prototype that we don't have a single operating small modular reactor anywhere in any democracy in the world generating electricity. And yet to casually throw $2 billion to it when they've just said Canadians will have to sacrifice? Why do young Canadians have to sacrifice, and why does the next generation have to bear the brunt of our government today deciding in 2025 that our oil and gas cap is off, that we're not even going to mention that we're legally bound under the Paris Agreement to reduce emissions?
Okay, so of course Elizabeth May being very, very upset about environmental changes that are being made here. And thank you, Brandon. I just got the PDF. I was able to find it here doing a PDF search on Google, searching for the specific file. Let's take a look at this together. Let's get into the nitty gritty of what actually is inside of this. We don't want to look at it on this. Let's take a look at the actual PDF version, which will give us the entire budget here. Canada Strong is the announcement of, or the title of the budget. And let's take a look first at this table of contents, because that will give us an idea. We'll have a letter here first from the finance minister, likely. Okay, yeah. So they're going to frame all of this first: global context, Canadian economic context, saying why they're doing what they're doing. Here's all the reasons that we need to spend like we're spending. This is the first two chapters. Canada economic outlook. Everybody is having a hard time right now, they're saying, and that impacts Canada's outlook. Some scenario analysis. We'll take a closer look at all of these as we go. Canada's path forward is to improve productivity. This is something that I am all for. Let's check. That's one to highlight. That is one to highlight. We're going through this table of contents so we can figure out what the most interesting stuff is. Canada's path forward is to improve productivity. I would agree with that. It's one of the most critical ways that we can increase wages relative to the cost of living. I think that this is something that is very important to hone in on. The question is, how are they planning on doing that? New industrial strategy, likely this is tied to it. The industrial strategy being these national projects, this government spending. Let's see if there's any additional market-based forces or changes to regulations to allow for more industrial growth. We'll get into that. Chapter 4, this is going to be a critical one. Let's get into that very soon. All right, new approach to budgeting. This is talking about the capital versus operating expenses. This is not my favorite idea here. I think that it reduces government accountability for the spending that they do, shifting things into two different categories: operating, the government daily spending, and trying to reduce that, and then having a growing capital spending, investment spending. I'm skeptical that the growing capital spending won't include the typical bureaucracy that comes along with this operational spending. If you just move the bureaucracy from operational expenses to capital expenses, because you're creating Build Canada Homes, you're creating the national projects offices, all this kind of infrastructure to support these massive investments, are you really reducing the size of the federal government and the spending there? We have to find out. Fiscal outlook, okay. Yeah, accelerating major nation building projects. This has been one of the biggest criticisms of the Canadian government, is that, hey, you campaigned on moving quicker than any government ever has. 8 months later, we don't really have that much new to report. We've had the announcements of these new projects, many of which were already in the works. No new shovels in ground as far as I'm aware. Major projects office, supercharging growth. This is going to be interesting. Productivity super deduction. Again, I'm talking about productivity as one of the ways out of the generational crisis that we have here in Canada, and that is the cost of living relative to wages. Canadians today have a far harder time than Canadians quite a while ago, when living costs were dramatically less relative to the average wages. We've seen a growth in the cost of living, both in housing and services and goods. How is this going to be handled, and how can we get our way out of it? Productivity is one of the ways that I'm looking at here. How can we increase Canadians' wages? So far, the highlights that we're going to get into, productivity improvement, new industrial strategy. That's very interesting. Supercharging growth via productivity, super deduction. Let's check that out. Tax incentives. Let's see how this is going to impact you and your money. We're going to get into all of this. Immigration plan, how is that going to change? That also has an impact on productivity. I've long made the argument that if you have a glut of a cheap labor, that is a result of adding more workers to your economy, while you're not as incentivized to be more productive as a business, to invest in innovation, because you're having to pay people more, you hire fewer people. This is something that immigration plays a role in, certainly. Climate competitiveness strategy, how will that change? Supporting critical mineral projects. This is one of the major areas that the Canadian government is going to be spending money and supporting in the coming years, it seems. Shifting from reliance to resilience. Okay. Becoming our own best customer. Lots to get into here. Let's see if we'll also get more updates on Build Canada Homes, Canada's housing plan. Is that something that's in here as well? Modular Energy Canada. Okay, Eric Alharb says modular reactors for data centers. So maybe a big AI play here, maybe a big cloud compute play here in terms of more energy for more AI. Carney's talked a big game on AI. Yeah, we'll talk more about building multi-unit homes, all of these housing initiatives. Middle class tax cut. Okay, is that just going to be a rehashing of what they already did? Around $400 for a family of two, I believe. Maybe it was $800 for a family of two in terms of tax cuts. Oh yeah, they're announcing things that have already been announced here. The carbon price. Yeah, A_L says decade-long road to productivity, and we haven't started yet. It's something that's frustrating. A lot of talk about speed, and we haven't seen a lot of movement here. But of course, these things take time. But how much time is reasonable? This is interesting. Canada Disability Benefit, that's something a lot of people have been looking towards. Is that going to be more accessible? Is it going to be higher? This is an area, like I'm someone who is all for spending on social safety nets for people who truly need them, and investing in the country in that way. Not entirely sold yet on the industrial policy here. We're going to have to wait and see. It could work. It may not. All right, let's get into some of these specifics, because we've checked in on a lot of this. The first place I want to start is on how we're going to be planning to increase our productivity. Where was that? Right. Yeah, Canada's path forward is improving productivity. Strong economy is tied to strong productivity. Okay, yes, making the argument that productivity is good. The median income of a family with one child would be nearly $11,000 higher if we had kept pace with the U.S. Largely, their productivity growth has come from the growth of their economy via the tech sector. So interesting to note there. Okay, so just comparing Canada's poor productivity growth. Canada's poor productivity growth. And a lot of people will say that this is GDP per capita as well. One of the issues of the larger immigration policy in Canada is that the pie, yes, it was growing, the GDP was growing, but when you slice that pie up into the amount of people in the country, the amount of workers, well, that each slice had gotten smaller. So is GDP growth actually a positive thing if it doesn't result in improvements in quality of life for the people that are making up that economy? This is the question. Okay, so how are you going to help it? We've had less business investment. We've had weak investment in machinery and equipment. Okay, they're saying there's risk involved in this type of investment. So maybe they're going to address that, make it easier to for businesses to take risk. Okay, they're justifying what we will do. We must look to new high growth markets and invest in technology that can unlock its economic potential. I'm here for that. Positioning the economy for success in the future. Digitalization. Okay, these are a lot of words. We'll see how these actually play out, because you can say the right things and sometimes they will pan out and sometimes they won't. New industrial strategy. A big proactive approach, new comprehensive industrial strategy. They say that high impact actions for lasting growth. All right. And this is going to look like infrastructure projects, public investment in R&D, regulatory reforms. I like this idea. I like this idea a lot. Regulatory reforms, cut red tape that slows private investment, limits trade, labor mobility, all great stuff. Productivity super deduction, we'll get into that in a second. Infrastructure projects and public investment in R&D could be a good idea. I'm skeptical of government choosing winners and losers. Where should they invest? The government choosing which industries are worthy of this public R&D investment seems like a challenging thing to predict, and I wish them the best of luck in that. Same with infrastructure projects. What actually will result in economic growth? Now, government, I think, has a role to play here in this infrastructure project investment. It's for us, especially things like roads and railways, things like this. Government has always been involved in that. So not a bad thing to see here. Major Projects Office is going to fast track that. All right, and then they make claims that we're going to attract private capital by accelerating major projects. We've already talked here. They're going to make estimates about how much capital investment they're going to generate from this. Nobody knows for sure. I've heard reports, as I've said already in this stream, that, well, the reason that we haven't had investment so far in Canada, and maybe this Major Projects Office could actually be harmful to this, is because it's a lack of transparency in terms of which projects are being selected, which projects aren't being selected. Do you have the confidence to invest in a country where all of a sudden your major investment in a company will not be as competitive as a different company that the government has chosen to bypass regulations to have more federal support? This makes for a slightly less stable investment environment for Canada if we don't have all of these companies on the same playing field. This has been one of the criticisms of the National Projects Act, is that it's not reducing the regulations and red tape as they say that they're going to do, just right up here, right? They're talking about, we got to have regulatory reform. Certainly we do. They haven't introduced any legislation on that front yet. But what they have done is saying, we're going to build all these national projects, but we're going to be the ones that pick which ones get done, not just open up regulations so that more can get done. We're going to choose who can get by these regulations more quickly. Hopefully they will introduce more broad regulatory reform to grow the economy. So they make these investments, further investment by unlocking AI data centers. And let me know also, if you're looking through this, what you've found that maybe I'm not talking about yet. I want to get into this productivity super deduction. Let's find that. Productivity super deduction. Have they talked about what it even is? Okay, let's go back up to the index here, because then we can get directly to it. Accelerated investment incentive and immediate expensing. To boost productivity and attract investment, this new government is introducing a productivity super deduction, a set of enhanced tax incentives covering all new capital investment that allows businesses to write off a larger share of the cost of these investments right away. These will also make it easier for businesses to invest and grow. Under this measure, companies can recover their investment costs faster through the tax system. This makes it more attractive to invest in machinery, equipment, technology. Okay. So interesting. What do we have details on that? Accelerated investment incentive, immediate 100% first year write-off. Okay, that's pretty big. That's pretty big. I'll talk about exactly what that means in a second. I'm sure a lot of you are familiar, but we'll get into it. Immediate expensing of clean energy generation and energy conservation equipment and zero emission vehicles. Interesting. This is something that was previously, that the government previously had going on, but they brought that back over recent years. Expensing of productivity enhancing assets, patents, data network infrastructure, and computers. Immediate expensing of capital expenditures for scientific research and experimental development. I think this is a good thing. People will say, okay, this is actually just giving too much help to companies. You shouldn't be doing. I think it's a good thing. To explain exactly what this is, 100% first year write-off. There's something called a capital cost allowance. When you're a company or when you're a business that is buying assets that will help their business, when you're buying equipment that will help your business, a lot of the time you can take the full cost of that and you can depreciate the value of it over time. You can write off portions of it against your income. So if you're a business that makes $1 million and you buy a $200,000 piece of equipment, and maybe in the past $20,000 of that, $30,000 of that could be reduced on your income for the year. So you're paying less tax on your income that year because you've used part of the purchase of this equipment to reduce your net income. Now, what they're saying here is instead of only 10-20% of that investment being able to be counted towards reducing your income, they're saying 100% first year write-off. So you make $1 million, you spend $100,000 on buying a big new truck for that business or some sort of other equipment, depending on what the industry is. Now you can take that $100,000 and instead of claiming $1 million of income as a business, you can only claim $900,000. Now with the corporate tax rate, I believe around 25%, that makes a pretty big difference in terms of your tax obligations. You could be paying $25,000 less in that fiscal year, which makes the cost of investing in these things less. It is an incentive here. So interesting stuff. Yeah, where is this? We've got Modem person saying, where's this 493-page document found? I can only find a 23-page one. I just searched budget-2025.pdf in Google, and I was able to get to that. So you can, my phone just thought I said, hey, search engine. So check that out. You can check that out there. Let's tune in to see how we'll get more into this. Let's get back into some of this special coverage, see how people are reacting to this. Here's the leader of the Bloc Québécois making his comments.
À recevoir un chèque de pension de sécurité de la vieillesse moindre que ceux de 75 ans et plus. Et dans toutes les associations, même
more panel talk
ces gens-là qui représentent.
Let's tune into there.
Picture of the country right now.
I think there's a couple of things. The environment that it comes from is still very perilous, and there's not a ton in this that addresses what happens if things get worse and not better. This offers a plan to how to get out of the mess we're in into a better place. That plan comes with a high degree of difficulty, and pulling it off is going to take both time and execution, neither of which we have in abundance. We don't have a ton of time, and we don't have a long history of governments, recently anyways, implementing some of these big, bold, ambitious plans that they've had. And so, you look at some of their tax programs where they're trying to incent businesses to spend more, build more, produce more. The manufacturing side of it, I think, is one of the most interesting ones where they've really ratcheted down the potential tax burden on manufacturers in this country, so long as they build more, do more, create more for Canadians, by Canadians, employ Canadians. But as I say, the degree of difficulty in that is enormous, and the margin for error is incredibly small. Things could very easily get worse and not better. And there's not a ton in this budget that lays out precisely what they'll do for Canadian businesses, Canadian workers, if indeed things do get worse, not better. And you have economists like Armin Yalnizyan that have been banging the drum for years now, but really in the last couple of months leading up to this, saying we need to have a better plan for helping workers now. We're going to get GDP numbers this month that will tell us that whether or not Canada actually slipped into a recession this summer or not, this plan is going to help the Canadian economy in 5 years, 3, 4 years. The problem is what happens right now, and can those two, can one crossfade as the other sort of comes up? That's going to be difficult to pull off.
As David was saying, though, is the idea to create an environment that is even more attractive than the United States and more competitive in terms of a place to stay here so that we don't lose business?
Yeah, so you go through like not to get too deep in the weeds, but it's budget day, so let's get into the weeds. The marginal effective tax rate is what we're looking at here. And they've tried to sort of bring it down through different measures for every sector. There's a chart that just shows every sector across the economy. And then if you zero in on manufacturing, it goes from, I can't remember the exact number, David,
8.2 down to 0.4.
To 0.4%. Effectively saying, if you build anything. If you buy a land and then put a building on it and then fill it full of equipment, you can write that off at 100%, and you can write it off at 100% right now. The equivalent in the United States, I think, is 12%.
12.1. And actually, I lied. It's 8.6. It goes down from 8.6, so it's even bigger.
So
right?
These are sweeping changes that I haven't had a chance to talk to many Canadian manufacturers about this particular yet. I think they will be really excited by that prospect. I think they will have concerns, again, about the implementation and about a lot of the money that's in this is Trudeau announced money, and rolling that over sounds easy, and you can write that down in a plan and put it in a budget. It makes sense. Actually converting it can get tricky.
But the other big challenge on the tax incentive, which the minister said when he spoke to reporters inside the lockup was, we want to make Canada the most competitive country on earth, and we want to remove the uncertainty for businesses looking to invest. Canada's done what it can, and it may be more competitive than the U.S., except for the tariff wall. And except for whatever Donald Trump is willing to do to target your sector and the lack of a final deal on even the sectoral tariffs, let alone CUSMA. So that uncertainty is it more powerful than the incentive of the tax
and it doesn't sound like that gets us to some overwhelming GDP growth projections.
That's exactly
either,
the point, right? That even with all of this, even once you factor in all of this spending, you're looking at like pretty sluggish 1%, 1.2% growth.
Keeps us out of a recession.
Keeps us out of recession, hopefully. And if it works, but as I say, high degree of difficulty, low margin of error.
It buys time.
Which is really important.
Okay, so a lot of different comments here. They're talking about the significance of these tax write-offs that companies are going to be able to make as a result of this productivity super deduction. And now, will these deductions actually result in productivity increases, or is that just a name? We'll have to wait and see what the result of this is. But I think that this would incentivize people to invest more in their companies. Now, you pair that also with the immigration policy changes. Now, it seems like they're planning on reducing the temporary foreign worker numbers in the coming year, albeit not to a crazy low level, certainly less than as of recent years. So they talk about, okay, the immigration system was built. In recent years, the system became even harder to manage and less functional. The pace of arrivals began to exceed Canada's capacity to absorb and support newcomers. I wonder if they're going to talk about this in the context of productivity, because that would scratch an itch that I've had for a while. People not talking about this in the context of culture or talking about it in the context of capacity to support, but also in the context of, are you able to grow your economy if you have a large surplus of lower wage workers than you otherwise would have if there was actual competition for this labor? I want businesses to have to compete, increase wages, increase the costs that they're paying for individual workers. I think that's what is best for actual Canadian people, and also best for these businesses to have this this pressure to innovate, this pressure to actually do something different rather than just increasing their profits by adding more workers. Will they talk about that? I don't know. Taking back control over the immigration system. Okay. permanent resident emissions target should be $380,000 per year, they're saying. That's just $15,000 people less per year than 2025. Reduced the target for new temporary resident admissions to 650, down to 385 in 2026, 370. So they show this lowering. Will that actually take place? Who knows? I wonder what percentage of this number is students, what percentage of this number is economic temporary foreign workers. I think that lots of immigrants have been exploited by the temporary foreign worker in past years, saying, okay, this is your path to permanent residency, but in reality, it's really their path to being a wage slave, really a path to helping out businesses over the actual individuals, also tamping down wages for other Canadians. What percentage of this is just going to help out businesses versus what percentage of this is students or temporary foreign workers in industries where we truly do not have those capacities in Canada, those workers. Okay, so this is interesting. Budget 2025 proposes a one-time initiative to recognize eligible protected persons in Canada as permanent residents over the next 2 years. Is this just shifting a bunch of people who are already here who may not have means to stay here into permanent residence to solve that problem? Well, it will also ensure those that are in genuine need of Canada's protection have their permanent resident status recognized. Okay, so it seems like this is going to be tied to asylum claimants, the full integration into Canadian society and the path to citizenship, $120 million over 4 years. So will this only be going to people who legitimately claim asylum and are approved through that legal process to have a legitimate asylum claim, or is this farther? Okay, and they're also increasing work permit holders transitioning to permanent residency in 2026 and 2027. 33,000 more work permit holders having a path to permanent residency. This is solving the problem in their eyes of a lot of the people that were exploited during the pandemic. People who were brought in to, in my eyes, help out businesses because they said, there's a labor issue, there's a labor crunch, we can't hire Canadians, when in reality, if they were to raise the wages, certainly Canadians would apply for those jobs. So will they be transitioning these people into full-time residents, permanent residents of Canada? It seems like this will be increased, the amount of people that are able to transition here. Keeping the permanent residence arrivals to less than 1% per year in terms of population growth. See, this is the big question because you can criticize immigration policy all you want, but we have a very big issue here in terms of demographics. Now, like Canada has been addicted to GDP growth by adding workers to the economy, not via productivity. But this budget does address some of that. Let's tune in and see what else is being said. Let's hop over to CTV. We got Don Davies of the NDP reacting. Also will be very important to listen in on this from a political sense because the NDP, they kind of need to support this budget. Otherwise, we likely will be going to an election over it. Now, I don't think the NDP wants to see that. They don't really even have a leader right now.
Skyrocketing prices in groceries and rent and housing as an ownership proposition is simply out of the question for too many people. We have unemployment at 10-year highs, particularly hard for young people, where 1 in 6 young people is out of work, and many more than that are underemployed. Economic growth is weak, and of course we face serious problems from south of the border. So it is in that context that we're evaluating this budget today. I can tell you that New Democrats are going to take the time to study this budget. We're going to consult with stakeholders. We're going to talk to Canadians, particularly working Canadians, and review this budget to see if this budget passes our lens of whether it works for working Canadians. So I'll happy to take any questions you may have.
Is this an austerity budget?
It's hard to tell at this point. You know, what I'll say is it's got a very large deficit. Spending is up in many ways. There are, some record investments, but it also is, cutting public services that Canadians need. So this is something that we'll be taking a very close look at.
That's still early, but...
Are you whipping your caucus on a vote, or will this be a free vote?
You know, traditionally on confidence measures, parties vote along party lines. So that's the tradition of our party. I wouldn't expect it to be any different.
It was still early, but was there any red line there in the budget so far that you've seen that it disqualifies you? Like, I know it's still early stages, but it seems like you're saying we need time to digest it, so there isn't an immediate red line that you said that would disqualify you guys from supporting it.
That's an excellent question. And one of the reasons I opened up with the serious problems we're facing is that there's complex issues that are facing us, and I don't think that we can oversimplify whether policies are going to respond or not. So I'll tell you a few things that we like about the budget. There's $51 billion in infrastructure spending, and that's linked to unionized jobs or community benefit agreements, which requires that work to be done through wage prevailing rates. So that could create good family-sustaining jobs, which has been a priority for the NDP. We talked about, campaigned on, an east-west clean electricity grid. That's mentioned on page 1 of the budget. And there's a specific mention of co-op housing, something that is near and dear to New Democrat hearts and something that we push for all the time. Some of you, none of you look old enough, but the Cooperative Commonwealth Federation was our predecessor, so co-ops are built into the DNA of the NDP. That's in there.
All right, Interim Leader Dan Davies, who is in a very, very interesting spot right now, right, Vashi? Because the Liberals, as we've been mentioning, have 169 seats. Before today, and we should lead with the news, he's basically not saying whether or not he will support this budget. He's talking about aspects of the budget that he supports, such as the infrastructure spending linked to unionized jobs, but not committing whether those 7 NDP members will vote one way or the other, because before today he actually even said that abstention was even a possibility. Yeah. So, basically he was saying, well, we'll think about it, we'll see what happens, but holding his cards very close to his chest right now.
I would say I sort of have the feeling after listening to that he's left the door wide open to supporting the budget. I think if he wanted to call it a budget of austerity, he would have led with that. A reporter asked him point blank, is this an austerity budget? He said, not sure. Like you pointed out, he came out of the gate kind of in support of the infrastructure aspect of this budget. So to me, there's enough there that it sounds like he could be someone who supports it. The real question, as you point out, is that he's saying, well, traditionally we all voted the same way, so I would expect it, but certainly wasn't saying emphatically, like, I'm going to whip this vote no matter what. So that's something to keep an eye on. But I would say that's not if he had come out and said, no, we might be headed toward an election, it would have been that concrete.
And speaking of election, let's talk to the founder of Nanos Research, Nick Nanos, who is also the chief data scientist. So, of course, the hypothetical possibility, and a lot of us are surprised that we're even talking about this before Christmas when we should be, looking for gifts and preparing our dinners, although perhaps it's a little bit early, is that Canadians could be heading to the polls, right, if this budget document doesn't pass. Give us, where things stand. How are the leaders doing right now in terms of their polling?
Well, when we look at the ballot numbers, it's a statistical dead heat between the Liberals and the Conservatives. There's only 2 percentage points or thereabouts between the two front-running parties. Omar probably sounds very, very familiar to election night for me, you, and Vashi when we were looking at that close race when it comes to ballot support. That said, when you map them out or model them out in terms of seats, the Liberals have the advantage. But if an election were held today, we'd probably still have a Liberal minority government. But what they're probably hoping for is that on the leadership front, if there were an election, that they'd have the advantage, because Mark Carney has a significant advantage over Pierre Poilievre currently as to who Canadians would prefer as Prime Minister, upwards of like 20 percentage points or thereabouts.
Can we talk
That's an interesting note there on the leader favorability, saying that people are more favorable of Mark Carney than they are Poilievre. Now, over the past few months, my personal take is that I've been disappointed in the Conservative Party in terms of the way that they've tackled things. And a lot of the talks that I've heard from Poilievre, it's been, here's all the ways that this government is doing the wrong thing. Here's all the ways that this government is doing the wrong thing, rather than being positive focused on here's how we would do things differently. Here's our plan. That being said, I was very impressed with his interview with Rosemary Barton on CBC lately. He talked about, okay, here are some legitimate reasons that we're frustrated. We've talked about the speed of building infrastructure. Nothing's happened yet. We've talked about the spending, and he talked really about the risks to this spending. We hear all this investment. We need to swing for the fences on these investments. But as with any investment, personal or otherwise, like if you invest in something, you will recognize that there is an upside potential there, but there is also a downside potential there. My biggest frustration with the Liberal government is that they are not representing that downside risk accurately. They're not talking about, okay, what does this mean in the long run if this industrial policy doesn't grow the economy as much as we expect it to, but we still take on this debt in order to do so? What does that mean? What does that mean for the actual lives of Canadians? In my eyes, it means a higher chance of more monetary policy intervention, which also in my eyes means a higher chance of a growing gap in terms of the wealth of Canadians. People who own assets, people who own businesses, own companies, do well when monetary debasement occurs, when there's more money added into the system. This is all very, very good for people who own assets, for the elite corporate class, as well as Canadians who have had more time to amass these assets. It doesn't mean that it's all the CEOs that are benefiting, although they certainly do in these situations. Also, Canadians who are more established benefit, and I think that the people who are most vulnerable, people who are largely dependent on cash, people who are dependent on or paycheck to paycheck, don't have the ability to grow up these asset bases, well, they're the people that struggle in these situations. If the Liberal government came in and said, hey, we don't know if this is going to work in the long term, here's the pros, here's the cons, we've landed more on the pros side, we believe that this is going to work for these reasons, but we recognize that this is a risk that we're taking, then I would feel a little bit better about it. That's why I was impressed by Poilievre's interview on CBC with Rosemary Barton, because he represented those risks accurately in my mind without saying that there was no way that it could work on the upside. I think that that's more of an accurate representation. But of course, the government isn't likely to talk about the ways that they could be wrong.
A little bit about the NDP. We just heard from the interim leader, Don Davies. I was mentioning with Omar, he didn't sound like he was the person who was on the verge of forcing the fall of the government. What is at play for New Democrats right now, based on what you see out there in your polling?
Well, they've got to survive. You know, the thing is that the support for the New Democrats is still in the low teens. It's lower than it historically has been. You know, usually the New Democrats have been anywhere from like 15, you know, and when times are well, like to the low 20s. And, you know, they're below their historical level that they have been at. They were just coming off an election where they were devastated. There's not a lot of money in the bank for them. They're without a leader. I think they're realistically, if there are candidates for parties to abstain or kind of create a situation for the Liberals to survive a confidence vote in the coming weeks, the NDP have to be at the very top of the list.
Any big surprises in this budget for you, Nick?
Well, you know what? I might look at things a little differently. It's clear that the federal government is focusing on infrastructure, but the big question is how long will it take for this infrastructure spending to actually have a materially positive impact on the day-to-day lives of Canadians? And Omar, and will that jive with when the next election is? Because, you know, the thing is that with the uncertainty about tariffs, with people worried about their jobs, with many Canadians struggling to pay for the groceries, they're thinking about, you know, not how strong or weak the economy might be in 3 or 4 years when all this infrastructure spending kicks in. They're thinking about, how am I going to pay for the groceries this week? And I think for the Liberals, that's going to be the balancing act. Persuading Canadians to to continue through these uncertain times and worried about paying for the bills, knowing that they'll have to wait to see how the positive impact of this infrastructure spending will be and how big an impact that might be.
Are you surprised at all that there wasn't a few more goodies in there that would have addressed exactly the issue that you're laying out in the more in the immediacy versus let's wait 5 years for some of this to trickle down?
Yeah, actually, I'm quite surprised. Like, you know, if the Canadian economy was a patient, I don't think we've understood what the pain management in the short-term strategy is for the Liberal government. I think the Liberal government have a particular diagnosis. They have a plan for the long-term health of the patient, if that's the economy. But in the short term, how are they going to deal with pain management? And you know what, Vassy, pain management is critical to the survival of any government, especially a government that's in a minority situation.
Great point. All right. Thanks, Nick. Nick Nanos is the founder and chief data scientist of Nanos Research, of course, also our pollster of record.
And let's get to our chief financial correspondent, Amanda Lang, right now. Let's pick up a little bit, Amanda, for some final thoughts from you about what Nick just talked about. Obviously, these are promises, and the execution strategy can take years, if not decades. And Canada seems to be right now in an existential moment, at least for the tens of thousands of workers whose jobs depend on the trading relationship with the U.S. Does this budget address those concerns in the short term?
Omar and Vashi, I've had a chance to look at it, and the centerpiece of this budget, as far as I'm concerned, is what the government is calling productivity and competitiveness, $110 billion of spending. And in there are all of the signs of the folks that put this budget together, the business leaders of Mark Carney and Tim Hodgson and the like, because it is a suite of tax incentives that are very material. They expect that to spur spending and investing by business of $500 billion in this country, and it will come immediately, and it could come very fast. So the business investment that's been missing, they have crafted a suite of tools that they hope to get it here. There's a whole host of new planning around upping our export diversification. There's actually a new strategic exports office. They're going to be spending on key infrastructure for exports through transport. There's billions of dollars spent that way, and a whole lot of new support through EDC, $25 billion of it, to help businesses get overseas to new markets. So taken together, the business part of this budget is actually, it's not about affordability, but when we're talking about how you create growth, it's in here. Will it work? Maybe. Will it come at a cost? Yes. But for instance, those tax credits the government thinks will cost less than $3 billion a year, but generate at least $10 billion a year in economic output. So this is material stuff. It may be boring, but I think this is really the important stuff that will make a difference.
All right.
And the positive that I see there that I'm talking about is that this is productivity, this immediate 100% write-off for investments that Canadian companies make, is that is getting out of the way in my mind. That is saying you can invest in your company and you are going to get a tax write-off for that. You're going to get a tax benefit, and it's equally applied across the board. This is something that is surprising to me. I was thinking of this budget, and it still does have its problems. It does have its problems in terms of the government choosing winners and losers, but I am far more in favor of these types of policies that are equally applied across the board for all businesses. Rather than the government picking and choosing individual industries to invest in and to give regulatory relief to. Far better, in my mind, to create something that happens across the board. Now, critics of this, maybe more left-leaning people perhaps on the NDP will say, well, how come you're giving more corporate subsidies? Because, of course, when you allow for these larger tax write-offs for companies, well, that means less federal government revenue via the taxes that are not paid as a result of this. The reduced income that these businesses will show, resulting in them not being not having as large of these tax obligations. Some will say, well, at a time when we need to worry about our debt, at a time when we need to invest in Canada and grow the Canadian economy and grow public services for Canada, grow the investments that Canada's making, well, don't we need more tax revenue? It seems the government is saying, you know what, we're already getting into all of this debt. We're already taking on $70 billion or $78 billion of spending that is not paid for via taxes. So if we can lose $3 billion but also spur economic growth, maybe they don't care about that a ton. It seems that's my interpretation of what's being said right now.
Amanda, and Power Play, a special edition of Power Play is coming up right here from the foyer in just a moment. And Omar, I know you've got a lot on the go as well.
We have lots more coming up on CTV National News, and thanks, of course, for joining us, and we'll see you a little bit later.
The federal government has just tabled its budget, one that they have categorized as a once-in-a-generation budget. Here is Federal Finance Minister François-Philippe Champagne standing up in the House of Commons to deliver the news.
Bold and swift action is what is needed. To weather the storm of uncertainty, we will not lower ourselves, Mr. Speaker. Quite the opposite. We will raise them to catch the winds of economic change, because we believe in Canada.
There is a lot for us to unpack from both a policy and political perspective. The politics of this budget has been a focus now for a number of days. Minister François-Philippe Champagne. First,
they gotta kill this music.
To the details of this. than projected just a number of weeks ago by the parliamentary budget officer, who said it could top out in the neighborhood of $65 billion. It will instead run at about $78 billion. There's lots of other stuff in here, though, that leads the government to that number. And for more details on what you need to know about what's in this budget, I'm joined live by our chief financial correspondent, Amanda Lang, who has spent the last hour, as soon as that embargo lifted, going through the details of what's in it. I know we just finished the special and you were flagging some of the incentives that the government is putting in place that they say will spur economic growth and productivity. In layman's terms, why do you think that is so important?
So the interesting thing to me about this budget, Vassy, is they did pre-announce a lot of the things that we would say fall into the affordability kind of bucket. They're building more homes, trying to help on the housing file. They'd already done that income tax for middle-class Canadians, although they kind of reiterated here it's costing about $28 billion. But it is that Canada's productivity problem, our economy was already facing some weaknesses, and they're addressing it in this budget, and they're doing it in a way that's very aggressive. I mean, when the finance minister says we're putting up our sales, they're making a big bet, and the bet is if you create an environment for investment, people will come, and the investment will happen. Business investment in Canada has been falling for decades, and it costs all of us. So they're going to spend by creating tax incentives. There's a whole host of them across a whole range of different categories. It's immediate depreciation. So if you're a business person, you get the credit immediately. It really incentivizes you to do it. Will it work is the question. It's very bold. They're also spending, Vassy, in a way that I think is very important on trade diversification, and they've put very specific kind of strategies around that, trying to get big businesses to diversify, working on our transport corridors, digitizing our ports, digitizing our infrastructure around transportation. Those are all really important investments and may actually spur economic activity in this country in the short term. We will focus, of course, on the deficits, and they are saying there will be cuts to the civil service. That will be painful, and that may actually, be a drag for a bit of friction on the economy, of course. But what they're also saying is they think that the investment here will attract 3 times the capital that they're spending, that private capital will crowd into the Canadian economy. It's a big gamble, Vassy, but it's clearly, to me, that's the centerpiece of this budget. It's not about building homes. It's not about pipelines to Tidewater. It's about fixing Canada's productivity problem, which has been around longer than you've been alive.
Okay. I think that's true. All right, Amanda, thanks so much for your perspective. I appreciate it. Our chief financial correspondent, Amanda Lang. And if you look at the bottom of your screen on the ticker there, you will see each of the details of the budget, the ones that we have deemed, of course, after looking through this 400-page document, the most important to convey to you. And we're going to unpack those details throughout the hour. This is, however, a political show. The budget, while it's a policy document, is also inherently a very political document. And so we've got to get reaction to what's in this budget and what isn't in this budget from.
There you go. By the way, if you're just tuning in here, I'm looking through the budget on my other screen, and as I find these very interesting points, bringing them up here, tuning in here to Power Play to see how this is going to play out politically. Because if we don't have support from this man right here and his party, well, then we could be going to an election.
You know if you're going to support this budget?
We don't yet. We just got a lockout about an hour ago. We haven't had a chance to meet as a caucus yet, which we'll be doing tonight. We plan on studying the budget and really understanding it tonight, and then we'll meet tomorrow morning and start having our political discussions. And we also want to check with some stakeholders and hopefully talk to Canadians, particularly working Canadians, and find out whether this budget's responsive to their needs.
You had identified coming into the introduction of this budget, primarily you didn't want to see a budget of austerity, which a few months ago was one of the ways in which the Prime Minister had described it, much less now. And you wanted to see enough on the investment side of the ledger. They have maintained all the social program spending that they had indicated that they would, the transfers to individuals, the transfers to provinces, the lunch program, the dental care program, a whole host of other programs that had been put in place under the previous government. Is that enough to signal to you that the concern you had expressed was taken seriously?
Well, I always think it's important to contextualize this budget a little bit. We haven't had one in 18 months, and the country's facing, I think, very serious economic issues. Unemployment's at 10-year highs, particularly hard for young people, 1 in 6 people out of work. we have skyrocketing prices and everything from groceries to rent. Economic growth is weak, and we have, of course, our serious problems from south of the border. So serious affordability issues, and our economy, I think, is I do agree with the Prime Minister, it's at a bit of a crossroads. So we want to see a budget that has investments. And so this budget is a complex one. There's things in there that we like and things in there that we don't like. And we're going to be taking the time to kind of evaluate them and see where it comes out in the balance.
On principle, though, can you acknowledge that a $78 billion deficit does signal that the government leaned way more toward investment than to austerity?
Yeah, and let me say, I'll give you some things I like and some things I don't like. So there's $51 billion announced in infrastructure spending, and it's at least notionally tied to unionized work or community benefit agreements, which is wage prevailing rate. So that meets one of the NDP's calls.
I think that this is signaling that the NDP will be supporting this. They don't want an election right now. I don't think that the Conservatives really want an election right now either. I don't think it would change a lot, and they want time to go through their leadership review in January, where my current thought right now is that Poilievre likely will be the leader here going forward. I don't really see a major candidate stepping up in this election cycle or in this leadership cycle, although I do believe that the Curtis MP right now, Jamil Javani, likely has his eyes set on being the Conservative leader in the next 5 years or so. I think that probably is the most likely candidate in my mind as a successor to Poilievre, but that's a cart before the horse right now. I think that it likely will remain to be Poilievre. Now, I've had a couple people ask me, what are some things that you like? What are some things that you don't like? We've talked about how I'm actually very happy with the productivity measures here. I think that will encourage more business investment, and it's equally applied across the board for every single business. Now, I think that it's a very conservative policy where, like, this is a major tax break for a lot of companies, and not just companies that are above a certain threshold, major companies that employ a certain amount of people, these big corporations, conglomerates. It's not just a tax cut for them. It's a tax cut for every individual entrepreneur, a tax cut as long as it is implemented in the way that I expect, which we're going to have to wait and see. That's one thing I like, that's 100% tax write-off on investment. One thing that I'm not so happy about, and that I think is the biggest risk of all of this, and I've talked about it before, but it's the debt management strategy and what's happening here, as well as the way that we're framing this as a budget that is sustainable, as a fiscally sustainable course for the government to take on. Now, we've talked in the past about fiscal targets or fiscal guardrails, things that say, okay, as long as we lock into this, we will be okay sustainably. For a long time, that was saying, okay, we don't want deficit spending at all. Now, the goalposts were then moved to saying, okay, we don't want a deficit that is larger than our GDP, or rather, we want this to be going down, right? Having a smaller and smaller deficit relative to the growth of our economy. This is our debt to GDP ratio, something that we've sort of seen here. This is, public debt charges since 1984. This is likely deficit to GDP because of the percentage that we're seeing. It's far lower than the, I think, close to 40s, 50s that the actual debt to GDP is. But this is showing now, okay, we've actually got this increasing now. We're projecting this to increase over the coming years, that, okay, our debt is going to grow faster than our economy is going to grow. And they're saying that this is something that is just going to happen and that they're okay with. Okay. But I just wonder about where are the fiscal guardrails now? What could stop us from projecting this to go up like this and say, well, actually, this is just the way that we do things in the Canadian economy now. There is no fiscal anchor here. Of course, they're shifting the way that they're framing their fiscal anchor to being, as long as we show a declining operational budget, as long as we show the day-to-day operations of Canada decreasing through this attrition of public sector jobs, the shrinking here, and other efficiencies that can be found in the day-to-day operations, they say as long as we can keep that going down, keep becoming more efficient on our daily operations, well, then we don't need to think about how much we're investing, because that doesn't matter. I don't love that. It's an accounting trick. It's an accounting trick, and it reduces any kind of any kind of anchoring that you have in terms of the spending overall in the budget, which is something that I'm concerned about for all the reasons that I've talked about. The more and more deficit spending that you have, in my eyes, the more and more likely it is that we'll turn to monetary debasement as a way to handle that at some point in the future. Not right now, but when there is another disaster and the bond market dries up, I think we see central banks, the Bank of Canada included, print money again, or come up with some other mechanism that dilutes the value of dollars for average Canadians, increasing the value of assets and investments that people who are more established have, while reducing the values of the dollars that people who are most vulnerable earn and often are most invested in. Most, like a lot of people who are paycheck to paycheck or have a very small emergency fund, their wealth is in dollars, not in investments, not in the S&P 500, not in real estate, all these things that benefit. Yeah, let me see if I can crank the volume a little bit so you can hear me a little more clearly. I don't want to clip. That should be okay. Hopefully that helps you out. So this is something that I'm concerned about, because now they're saying capital expenditures will be growing, untethered from any kind of guardrails here. They can just choose whatever number this is, and saying as long as we just reduce that operational spending, then we're okay. I don't love that also, because I think that I worry that the bureaucracy of the operational spending on the day-to-day basis will just be moved into this capital expenditures. Do you know what I mean? Like if you reduce public sector jobs, but you open 5 new agencies and you call them capital expenditures, Build Canada Homes, national projects offices, are we just shifting where this money is being accounted for in an effort to show that we are adhering to some sort of efficiency metric? I worry about that. But that's not to say that there's nothing good in this budget, because, well, we've already talked about all the productivity increases that I'm hoping will work. This is a very conservative policy, tax cuts for business across the board, in terms of their ability to invest in their businesses, new equipment, new R&D. It'll be interesting to see how this actually all plays out. A lot of debt being refinanced in the coming year, $594 billion. Most of that, again, being refinancing the maturing debt. These are the bonds that we've already issued that are coming due. You got to pay those investors at the end of the day. So we don't pay them through new tax revenue. We pay them through taking on additional debt, rolling it over, refinancing the debt, much like you would a 5-year mortgage in Canada. You got your 5-year mortgage. When that debt is up, most of the time people don't have a balloon payment. They can't pay that all off at once, so they'll get a new mortgage, pay off the old mortgage provider, and then hopefully just stay in that new mortgage for a while. That's what the government of Canada does with its debt as well. But likely lots of costs here, and it will become more and more expensive if we see bond yields go up. Luckily, we haven't seen that as of late. Bond yields coming down is what we've seen today. I'm just looking through to see if there's anything new here. Let's hop back over and I'll continue looking here and bring up important things that I think that you'll find interesting as I do. And we'll hear some more of this political commentary on what exactly is going on. We're going to go back to CTV.
Which is good union jobs to be created with taxpayer dollars. The East-West electricity grid is mentioned on page 1 of the budget, which is something we campaigned on. And finally, there's a specific box and highlight of co-op housing, which is something the NDP has long fought for. On the negative side of the ledger, you've got cutting 40,000 public sector jobs. And, you know, when you have a jobs crisis, putting 40,000 well-paying jobs or people out of work is going in the wrong direction, we think. And behind every person is a service. So, you know,
this is where I disagree with Don Davies a little bit. He's saying, okay, well, we need jobs in Canada. There's a high unemployment rate. So we should be happy with growth in the public sector, growth in government. I think that directly fights against the productivity ideas here. We want to grow the Canadian economy. So I think that having fewer workers in the government and more people turning to the private sector for work, more people turning to entrepreneurship or sole proprietorship or like creating their own businesses because no longer can they then sit in government jobs, I think that could have a positive effect on productivity.
Canadians want to wait 6 months to get a passport? You want to wait 3 months to get your call back from CRA, or seniors waiting to get their OAS checks? I don't think so. And
do you think that's true, though, just if I may interrupt for a moment? Because if you think back 10 years or pre-pandemic, pre-pandemic era, when the size of the public service was substantially smaller than it is now, were passport services that much worse? Were services at the CRA that much worse? My goodness, the Auditor General, even with this level of employment, is signaling that you can't even get a right answer if you're lucky enough to get through. So is it that quid pro quo, that the amount of people working for the public service is directly correlated with the level of service that Canadians retain? Because I would contend that it's not.
Well, there's a number of factors that go into that. For one thing, I think the public service had been cut prior to that, so I think it had been growing back to its natural state. Also, the population has grown significantly in the last 6 years. The public service far outpaces population. It does, but also so have the programs. For instance, we didn't have dental care. Didn't have the Canadian Dental Care Plan 5 years ago either. So there's been an increase in services. You know, when I see that CRA, their answers are correct to Canadians only 17% of the time, that doesn't tell me that we have too many people working in CRA. So
I feel like I come away from that with the entire opposite thing. Like you add more workers to something that's inefficiently managed, and you expect it to become better managed, better results from just adding more people to it. I'm skeptical of that. I just made a face here. I don't know if you've taken a look at this. I want to show you something that I've talked about on the channel a lot. I've talked about this, and that is Canadian mortgage bonds. We are seeing the government invest more in these these mortgage bonds, these wrappers for Canadian mortgage bonds, investing in Canadian mortgage debt. Let's just read this first. Canadian mortgage bonds. The Government of Canada, as part of its agenda to catalyze major investment in housing and to build homes at a rate not seen since the Second World War, will increase the Canada Mortgage Bonds annual issuance limit from $60 billion to $80 billion starting in 2026. The increase in this cost-effective funding will solely apply to multi-unit housing. The increase in this cost-effective funding will solely apply to multi-unit. How will they do that? The government will maintain the current pace of its current purchases of Canada mortgage bonds up to $30 billion annually to allow the private market full access to the additional issuance. Okay. What does that mean in practice is what I'm trying to discern here. This is an interesting practice where the Government of Canada is buying up these wrappers. Like the big banks will put all of these mortgages into a sort of instrument. The Canada Housing Trust is also a part of this, and they're all CMHC insured mortgages as well. So the Canadian government kind of invests in its own debt obligations. It does seem a little bit insular, a little bit odd to me that this is a large area that they're putting this, but it seems like a way for them to allow the big banks in Canada, the TDs, the RBCs, the CIBCs, these types, to offload the risk of holding such a large housing portfolio because they can give mortgages to Canadians, wrap them up into these Canada mortgage bonds, and then sell them back to the government to hold on to that debt. They say that this will make them a profit because they're making money off of the mortgage rates that people are paying, but it also increases risk in my eyes. I'm going to dig into this a little bit further, and we'll talk about it more in the coming days and weeks. Let's get back into this.
I do think that it's important to put that in context. The couple other things I would say I don't like about the budget are they're getting rid of the empty homes tax, which was a measure aimed at particularly foreign investors who bought homes for investment purposes and left them empty when we have a housing crisis. So this tax kind of was encouraging them to put those housing units into the market. So this government inexplicably is removing that, which I would guess will take those houses out of the market. That's the wrong direction to go in. And finally, there's no digital services tax. At a time when we have a revenue problem, Vashi, and this government says we have to cut and make sacrifices, why are we not taxing the biggest U.S. tech companies in the world? We're talking
because it put us at odds with Donald Trump and with Joe Biden. Because it put us at odds with a U.S. government in both cases that was in this case, I should say, is taking direct aim at us.
Yeah. Well, that's why I like a budget that satisfies Canadians, not one that satisfies Donald Trump. and I think it's going to take some political guts in this country. It's a tax that the Liberals have worked on since 2021. It raises $1 billion on profits made by those companies in Canada, over $20 million. I don't think it's too much to ask that those tech giants pay some tax on the money that they make here in Canada from Canadians. It's a political choice, but when you have a revenue problem, you can either ask Canadians to tighten their belts and you can lay off public sector workers, or you can tax Mark Zuckerberg and Elon Musk. I would rather tax those people.
How serious are you about those concerns? Are you willing, as a party, to put, to not provide your support to this budget, therefore leaving the country? And I'm not blaming you, but I'm saying that that's your right, therefore putting us in a situation where we're in another election? Or will you put the interests of your party, which is, by objective measure, nowhere near a place where most would want to be to contend an election, will you put those interests ahead of the ones you just spelled out for Canadians?
Well, we're going to honor the lens that we announced from the beginning, which is we're going to analyze this budget through the lens of whether it's good for working people in this country.
But you've just told me it isn't.
No, I haven't said that it isn't. I've said that there's a number of factors on the plus side and the negative side, and we haven't had a chance to examine the entire budget and understand its full implications. It's a serious budget, Vashi, a critical budget at a critical time, and it deserves, I think, a really good, thorough, comprehensive look at it, and we'll analyze it as a whole. But I'm well aware that 6 months ago we just had an election. The country is in fairly serious economic problems. I don't think Canadians want an election. Right. I don't think we particularly need one. But again, that's up to Mr. Carney. I want to ask maybe whether or not he's open to making changes to this budget. That may be a possibility as well.
Is that something that you'd be interested in? You
Absolutely.
Would pursue that with him?
We're going to talk as a caucus tomorrow, and if this budget is not good enough yet, that's an option for us to do.
I just have one final question for you, and it's about something you said over the weekend, in which you laid out the possibility that nothing was off the table, including abstention. And I think for a lot of Canadians, when you just described the moment we're in, the important context of this moment, the significance of this document against the backdrop of that moment, how can you at the same time say it's okay to sit this one out?
Well, abstaining isn't sitting something out. It's taking a position. One of the interesting things about this moment is we're not only examining the budget and whether or not it's good for Canada and Canadians, but the unique implication of this right now is that it could cause an election 6 months after another election. That's not usually the case. So that's something that weighs on us. I'm a Jack Layton New Democrat. Jack said it's our job to come here to Parliament and make it work for Canadians. We want to be propositional. We want to be positive. I want to focus on policies that will help Canadians who are suffering. 50% of Canadians in this country are living paycheck to paycheck fashion. So they've sent us here not to play political games or to...
Okay, so we've heard this from the NDP. It sounds like they will be supporting the budget. Like you can't really listen to that. You can't really listen to that and come away with it with anything else but saying like he wants the government to continue functioning, which means they will vote in favor of the bill, not an election. I want to switch over here to the CBC coverage because we have some conservative reaction. I see here we already have additional Don Davies coverage, but Melissa Lantsman, I believe, is also on right here. Let's listen in on what the initial conservative reaction is. If I can unmute it.
I think you're there and ready to go, Melissa Lantsman. What's going on with Chris D'Entremont?
We're not talking about the budget.
We'll get to that.
I would hope we could take a few minutes to talk about
we absolutely will.
Generational debt that we've just been piled with.
Well, we will, but let's just talk about
a Conservative MP is no longer
Chris
in
D'Entremont
Tory
has resigned
caucus.
From your caucus. What is the view from your office there?
Look, Chris has, like Lisa said, Chris has made a choice, and I think the choice is, not to fight inflation, not to fight to lower grocery prices and lower the cost of homes like his constituents elected him to do. And I suspect that if Chris was Deputy Speaker, that he probably wouldn't resign.
Okay, so I get the pushback, but just help me walk me through the process. Was there a warning that Mr. D'Entremont was feeling this way, or did you learn about it in the Politico article today?
This is Chris's decision, so I think you can ask him how that all came to be. I certainly didn't know about it, but I'm telling you that Chris made a choice today not to fight for what his constituents sent him here to fight for.
Is it your understanding that he is sitting as an independent?
I don't know.
Okay.
I don't know what the letter says. Maybe you can tell me, or if there's a letter.
Well, I do not know this either. I was texting with people in Mr. Poilievre's office saying we heard he's getting thrown out and that it's happening now.
He certainly wasn't thrown out. Let's make that clear.
I know, but that was the point, is that I was told that he has resigned from the Conservative caucus, but not as a member of Parliament. Your understanding, he is still
That is
a member.
my understanding, yeah.
Okay, all right, well, we obviously need Chris d'Entremont to come down, but this is not a good thing to have happen, Ms. Landsman. That, for the Conservatives, the Liberals need 3 votes to get this budget through. Your leader has a leadership review coming up, and here you have one of your few Atlantic MPs leaving.
Yeah, well, look, I don't think those things are necessarily connected. I think Chris has a lot of time to figure out how he's going to vote on the budget. He ran on predicated on the fact that he was going to make life more affordable for Canadians. If that's what he is going to do, then I can't see how he possibly votes for this budget. But I think time will tell on that, and we can talk about all of the speculation about who votes how, but today we can talk about this budget, which I think was a really expensive one and a really long speech as well. So we heard it all. I think you read the budget into the record.
Well, it is the moment for the finance minister today.
It's a lot of moments.
But the deficit, $78.3 billion this year. It's not the $100 billion that some projections had. It is right around that 75 to 80.
Well, I don't think you get a prize for not being $100 billion.
No. But it's in that 75 to 80 billion sort of range, well above the 42 billion that your leader put on the table, and the industrial
above the 60 that he promised. Also, just in the election campaign, he costed his platform at about $60 billion, and he broke that promise too. Well above what every family can afford. This is $90 billion in new spending. It's $300 billion of new debt at the end of that 5-year cycle, which is $20,000 per family of new debt in this country. This is the biggest. This is the biggest budget outside of COVID. It is double what the last prime minister, who actually spent more than all prime ministers combined in his tenure.
I'll pause and I'll say that this is a weakness of a lot of Conservatives, is their lack of ability to articulate why that's a problem. Like, people hear it sounds so abstract the way that they're saying this is the biggest deficit that we've seen. We're adding so much federal debt. I think that they need to figure out their comms better on why that matters to people. People don't, on a day-to-day basis, see the Canadian deficit in their minds. They don't see how that impacts them directly when they talk about it in this way. They need to get on the same page in the way that they communicate about this, and communicate that this kind of stuff impacts your life in every single kind of way. Not necessarily when the government takes on debt, when the federal government spends more, borrows more, but more so what happens when you have issues in their ability to borrow that money. Their ability to turn to the bond market to raise that money. They need to figure out a way to communicate that, okay, this doesn't hurt your inflation in a big way right now. It doesn't hurt you on a day-to-day basis right now, but it increases the chance that in the future we're going to need to see a bond market that is always functioning, and increases the risk that smaller hitches in the bond market could force the central banks in Canada to intervene, to be the lender of last resort, which will impact your ability to your spending power, right? Because as we see more monetary debasement, which is always what happens at the end of the day when bond markets fail to be liquid enough to support government spending, well, when we see the central bank step in there, increases asset prices, increases things like stocks, real estate, and precious metals, maybe even crypto we saw during the pandemic. All these things that people who have additional funds can own, well, they go up in value, while at the same time, the purchasing power of the dollar is impacted here. The wages that you make don't go as far as anymore, but at the same time, assets like houses, which are a critical necessity for people, they go up in value while your dollar is worth less. Your costs in terms of groceries, your costs in terms of your day-to-day life, these things go up in dollar amounts while your purchasing power goes down, right? This is didn't do a great job of explaining it there. Like, that's not concise enough. That's not concise enough to really talk about it here in a meaningful way. But they need to find a way to communicate that deficit isn't just this abstract thing. It increases the risk that you will face in the future for the wealth gap to get larger. Like, I think conservatives and liberals agree that we've got these issues with this incredible wealth gap. I think everyone will agree that that's a major problem in Canada. A lot of people will talk about it like you need to tax the billionaires, tax the rich to extreme levels. Sure, that could be an effective policy in some ways. I think you need to talk about why is this wealth gap growing? It's not the greed of the billionaires. Well, in some ways, I think it's via their influence in macroeconomic policy that it actually is to some extent, but not in the way that a lot of people are framing it. That's my rant. I'll probably go off on that a little bit more here in a second.
There's actually about $154 billion in new spending, but it's offset a little bit by about $50 to $60 billion in reductions.
That's right.
So it nets out to a $90 billion increase, but the spending goes even beyond that.
That's right. And if he doesn't if he doesn't make those the cuts that he says he's going to make, then we can be in the $100 billion range.
But sort of the assessment, I know the conservative view is different than this, but a lot of economists, and we heard from the central bank, from Tiff Macklem, that monetary policy has done all it can to deal with what's happening with Donald Trump. Fiscal policy and industrial policy need to take the lead here to sort of help give the economy the tools it needs to reorient itself, and workers and businesses the supports they need to survive. So
that's a misrepresentation in my mind. The Bank of Canada has said we need to focus on increasing productivity, something that they're doing in this budget more so than I thought they would. But I don't think that they make the argument that we need to see government-selected industrial policy. That's not something that I've heard from the Bank of Canada, just that they need to focus on increasing productivity rather than anything else in terms of increasing the quality of life for Canadians.
That is a big part of what's happening here. Is there any value in that you see as you look through the measures on the tax side?
I think there are lots of ways that you can get that done. You can get the regulations out of way. You can rather than raising the industrial carbon tax, you can lower the industrial carbon tax, or frankly scrap it altogether. You can get rid of the stuff that stops us from building what we need to build in this country. But more importantly, if you're a Canadian looking at this who has been struggling to put food on the table, who's been struggling to put a roof over their head, who has been struggling with the affordability of everyday life, there is nothing in this budget for you. And I think Canadians right across the country, from coast to coast to coast, are going to look at it and say, what about me? What are they doing to help me today? And I think that's what we're hearing from coast to coast, and I think that's what every other opposition party will hear when they speak to Canadians.
Yeah, there is a list of affordability measures in the budget on page 24, but it is things that we have heard prior to budget day, right? The elimination of the carbon tax.
And today, life is worse than when we heard those. So, they haven't answered the call for affordability.
Well,
okay, so another interesting development here that people are talking about, we heard at the beginning of this segment about a Conservative MP who is leaving the Conservative caucus. It seems that there are reports that this Conservative MP will be joining the Liberal government, making a complete flip from the Conservatives to the Liberals. That is what is being reported currently. Will this happen? He said it's at, what have I done here? That's a big deal because the Carney government is really only a couple of votes away from never having to worry about these confidence votes. By turning themselves into a majority government, they would be able to pass all of this legislation as they see fit. The Conservative MP says he's considering joining Canada's Liberal government, switching from the Conservatives to the Liberals. Thinking about crossing the floor, and we'll decide in the next few days after reviewing the federal budget. This is interesting, saying that he's going to cross the floor. Falling out after his caucus refused to back him as Speaker for House of Commons. No way. So he's going to punish the Conservatives because they didn't want him to be a Speaker in the House of Commons? Saying he's more in line with Carney than the Conservatives, who is leaning further right than his Liberal leaders. That is fair. That is fair to say. This is what I said. This budget, while not being a Conservative budget, in terms of its spending, does have some more conservative leaning policies here. The stuff all about these productivity enhancements, tax cuts across the board for corporations trying to make Canada more competitive outside of government individual selection. And that's a very conservative policy. So is this him saying, okay, I'm more in line with this type of policy and don't align with the Conservatives on other economic policies? Perhaps. He's well liked within the Liberal Party and is not known to buy into the right-wing populist movement that Conservative leader Pierre Poilievre embraces. This is one thing that I find interesting. A lot of people will use populism as a dirty word, saying that it's bad to be a populist. It maybe has taken on a different meaning over the years, but I think that this is a positive word actually for political movements. Something that is populist means that it's applying to the population, applying to the interests of average people rather than to the interests of economic, political, corporate elite. I think that that's a fair thing to include in your policies, because the government should serve the average people just as much as it serves the elite people. And per capita, there are more people who are in average settings than the elite. So I mean, that's interesting. Another note. Generational investments. Yeah, right-wing populist. This is odd. I mean, it is fair. So that is something to keep an eye on, because it may not be that the NDP even needs to support this at all if we see them move on from the Liberal Party and turn to the or move on from the Conservatives and turn to the Liberals, this MP.
Champagne, who was a key minister in that government. I don't know how these ministers are going to frankly survive if there's going to be credibility behind the actions of pivoting away from Justin Trudeau's policies, if his ministers are the people who are delivering lines like that.
Brian, I'll give you the last word on this, and in particular the content of the budget. I agree that a lot of this was aimed at sort of embodying what they did during the election campaign, which was try and say, I'm Mark Carney, I'm not Justin Trudeau. Why do you think that would be part of the political purpose of this document? And based on the content, what you've observed so far, do you think they delivered enough on that?
Well, I think it's political posturing for sure, in the sense that they would have had the impression, I think most of us did, that Canadians were sort of done with the Trudeau era. So they're trying to put a demarcation line in the sand and say this is a new era. And also, I just think Prime Minister Carney is different than former Prime Minister Trudeau, and certainly has a different view on how the economy should work and where public finances should go and what type of programs there should be. So I think those two things make it that James is right to say it's pretty stark that it's actually in the budget and they're making that contrast. Look, I think the one thing about this budget that would worry me if I were them from a communications point of view, they're investing, they're cutting, they are letting the private sector take over. There's still major deficits of the government. It's a hard message to package this one kind of thesis. But governing is complex, and they're certainly not the first government that's going to have to try to figure out competing messages and how you kind of wrap that up so Canadians can understand what they're trying to accomplish.
That's a really good point. I would frame it as like this budget being somewhat of a bipolar budget, not to be insensitive to people who would struggle with that, obviously, but bipolar in that there are multiple different angles of this. There's parts of this that are very left-leaning in terms of the general industrial policy, in that we have the government here selecting industries that are getting additional funding, selecting industries that will be able to pass regulations, and specifically selecting individual projects that will get the full support of the government, while other private investments, private objectives, private projects will not get these same kind of regulatory bypasses that the federal government selected ones will. That is, I think, something that leans more into central control of an economy than it does into allowing free markets to increase the Canadian economy to get things built. On the flip side, we talked about all these the productivity enhancements policies, these things that are saying across the board, all of the corporations equally will have to pay less in taxes if they make investments into new equipment, new R&D. This is a very, very free market type of policy. So I find that juxtaposition, to get fancy with my language, to be very interesting. A little bit of a bipolar budget in terms of how are you going to message that, okay, more central planning at the same time as more market-based policies. Interesting stuff.
Okay, I've got to take a quick commercial break. Our front bench, I think, will be with us throughout the rest of the evening as we aim to parse apart what this budget means for you. To that end, I have with me here the House Leader for the Conservatives. Earlier, I teed you up as the government House Leader, but no, the House Leader of the Conservatives, Andrew Scheer, who's with me here in the foyer live. Mr. Scheer, before I get into your reaction to the budget, I got to ask you, we just got into our inbox. An MP of yours, Chris D'Entremont, has quit caucus, has resigned from caucus. Your reaction to that and what it says about your party?
Well, it's disappointing that Chris D'Entremont has decided that he doesn't want to fight for a more affordable life for Canadians, that he doesn't want to fight inflationary deficits that are driving up grocery prices in his riding. You know, he's now telling constituents that he just got their votes just a few months ago, that now he's in favor of the industrial carbon tax on things like farm equipment and fertilizer, driving up food costs, that he's in favor of fuel standards that the Liberals are imposing that's going to increase gasoline by 17 cents a litre. So, you know, he'll have to go back to the supporters in his riding that dug deep into their own pockets to support his campaign and explain why he took their precious time and resources and then turned their back on them just a few months later.
Might it be that he doesn't think your party's solutions are the correct ones now?
Well, you know, he ran on them in the platform. He saw our platform and he said, yes, I support all this back in April when Conservatives were offering hope to young Canadians who couldn't find jobs, who had to move back in with their parents, back into their parents' basement. Our platform offered hope for young Canadians. Mark Carney's message is one of sacrifice, that Canadians who have been hammered hard by the cost of living crisis are going to have to sacrifice even more to feed a ever-growing budget, a deficit that's going to add billions to the national debt that has to be paid off with interest. So Mr. D'Entremont's going to have to explain that to his constituents.
And I hope we have definitely requested an interview, and I'll be asking him those questions. But ultimately, what does it say that there might be enough in this budget and the way in which this Prime Minister is governing to satisfy someone who ran just a few months ago as a Conservative? Does that not say something more largely about your
party? I wouldn't read too much of that. I know Mr. D'Entremont has had some personal grievances about the fact that, you know, he didn't get elected Deputy Speaker. He's been kind of upset about that. So I'm disappointed that he let his own personal grievances get in the way of his commitment to his constituents, that he would fight for a more affordable budget to bring down the cost of living, to lower the tax burden on Canadians. But again, he's going to have to explain to all the people that he looked in the eye, took their donations, put signs on their lawns, and then explain why he betrayed them just a few months later.
Let's talk a little bit about the content of the budget. This government is decreasing immigration, getting rid of climate policies your party wanted gone, and cutting the public service. If you believe, as you told Canadians during the election, that those things will better our country, isn't this budget worth supporting?
Why do you say they're shrinking the size of the federal
public service by 40,000 jobs?
Well, you know, what I saw was a deficit of $55.6 billion. Sorry, that's public debt service. The deficit under Mark Carney is even bigger than under Justin Trudeau.
I didn't say they're not spending, but I'm saying that they are cutting the public service, which is something you advocated for.
Well, first of all, there's a lot of notional things that they're hoping Canadians will trust them will actually come to fruition. When you see a government that's announcing new programs, massive amounts of new inflationary spending that's going to drive up that deficit, I don't see that as the government getting smaller. I see more and more Canadians having to work harder, pay more taxes to pay the interest on that debt that Mark Carney's racking up. I mean, what Mark Carney has essentially said is, after 10 years of inflationary deficits and massive overspending by Justin Trudeau, Mark Carney is saying the problem in Canada is that the government wasn't spending enough, that the deficit wasn't big enough, and that the debt was not big enough. You know that now under Mark Carney, more of your tax dollar is going to pay the interest on that debt than on health care? That's not sustainable.
I have a number of questions for the minister about the level of debt service charges, and I do take your point on that. I also think back to the last time we, as a country, were in a crisis in 2008 and 2009. And I remember the Prime Minister at the time, Stephen Harper, spending a lot of money on infrastructure in order to stimulate the economy. When I look at the line items that add to increased spending to drive up that deficit, a huge chunk in this case is exactly that, is spending on infrastructure in order to spur economic growth against the backdrop of an economic crisis. Why was it okay then and not now?
Well, the difference was targeted investments after years of balanced budgets, bringing Canada's fiscal house back in order, versus now when we see a government that's really spending a lot of money on areas that's not going to benefit Canadians. There's not a single affordability measure in this budget, not a single thing that's going to lower grocery prices or reward hard work. This is a budget that's creating new ways for the government to spend money. It's bloating bureaucracies. All the things they're talking about are notional and far off. I look at the tables that they actually put in the budget. Investments going down this quarter, it went down last quarter, they're projecting it to go down next quarter. This is all since Mark Carney's become Prime Minister.
So what would you have them do? Nothing? Because that's like, do you think that would resonate with Canadians? I mean, you're literally describing a situation where because of the economic crisis, investment is declining. Is there no role for government at all in stimulating a reversal of that in the same way that we did see Stephen Harper do?
That's a great question. I think Vassie's doing a very good job here in articulating some of the it's frustrating thing. Like, this is going to be a challenging budget for the Conservatives. Like, I think that this is going to be challenging because there's a lot of conservative-like policies in here. There's a lot of conservative-like policies in here and things that Conservatives have been asking for in terms of making it better for businesses to invest in Canada. If he was more critical and saying, I don't like the idea, maybe I'm just like projecting like what I think onto everybody, but maybe that's what everybody does. I think that even made the point of saying, you know what, we like some of the stuff in this budget. You can spend as a government and have it grow the economy as long as those investments pay off in the long run. We do not believe that these investments will be appropriately allocated and that it will be free from any kind of fraud, by the way. I think that if he makes that kind of point saying, investment in the Canadian economy from the government can work, we would do it a lot smaller than this. We don't think that it warrants this size, and we don't think that it will be efficient and that these investments will pay off in the long run, meaning that there's all these downsides for Canadians in the term. It could work, but we don't believe that it will be managed in a way that it will work. I think that that's a better angle to attack this from, rather than saying any kind of deficit spending is inflationary and will hurt Canadians. I don't think that deficits in general will immediately impact Canadians. I think talking about this from the side of, okay, when central banks start to get involved and when the monetary base expands, that's how Canadians start to get hurt, rather than this abstract deficit debt. You're going to have to work so much more to service these service the debt costs. It's harder for people to really wrap their heads around, I think.
I bristle when you say the choice is either what the Liberals have or nothing. You know, Pierre has outlined a lot of concrete measures to help stimulate investment in Canada. For example, exempting capital gains taxes from people who reinvest in Canada. That's a concrete measure that would help bolster that investment. I also object to the idea that there's an economic crisis that is just appearing on the horizon. Mark Carney and Justin Trudeau, the Liberal government, purposefully tried to destroy the energy sector in this country. That's a sector that provides billions of dollars in investments. Mark Carney said he cheered on when when the Liberal government canceled Northern Gateway. He advised that the carbon tax was set too low. He supported all those policies that chased away all that investment. Now Conservatives are saying, let's bring that investment home with things like cutting the capital gains tax on reinvestments in Canada. Mark Carney goes down to Washington and says his plan is to increase Canadian investment in the United States to try to appease Donald Trump. So he's really been all over the map when it comes to investment.
There are specific incentives, though, built into this budget that aren't just about spending to do exactly what you're stipulating, right? They signal that they're going to remove the emissions cap, which is something the Conservatives have long asked for in order to spur development on the energy side of things. They're extending the carbon capture tax credits, which oil companies specifically have been asking for, I think all the way out until 2040, and they're reducing the marginal tax rate. Like, isn't that exactly what you spelled out? And why are you sort of reflexively saying all of it is wrong?
Well, we're not reflexively. We had the budget documents throughout the day. We've been going through it, and one thing I did notice is that they are increasing the industrial carbon tax. So it's not really fair to say they're eliminating the production cap on oil and gas when they're increasing the carbon tax on that very same
Do we know
sector.
for sure it's going to increase? Because it sounded, when I read through it, it was like stabilizing it, making sure there's certainty. You know for sure that it's going to increase. I saw the word enhance, strengthen. Those are Liberal code words for it. It's going to. They actually, I believe,
believe I'm correct in saying
this is a bad look
they
for
actually
Scheer.
said that because they're doing these other measures on the industrial carbon tax, that would be the justification on the production.
I think you drop the carbon tax argument altogether. I think that they're leaning too far into that because of how well it worked. I want the Conservative Party to be as strong as possible. The more competition between these parties means better results for everyday Canadians. So I provide this criticism with hopes that they do better and increase and compete to be the next government of Canada. I think that that's the wrong strategy. I think you got to talk even more, like people will criticize Poilievre for being populist. I think you got to talk even more populist. I think you got to talk even more fighting for the best interests of average everyday Canadians. Not that like people saw the carbon tax coming off in terms of the consumer carbon tax and didn't see a lot of change in their quality of life. I think people will see that this industrial carbon tax will think of it similarly, saying, will I actually see like, okay, well you can make as big of a fuss about it, and perhaps it will make a big issue. Make a big difference. But I think that people will think that it's too abstract. I think you got to get down to day-to-day costs, day-to-day lives. And how do you connect that? How do you connect all of this additional spending to cost of living? You do it in the way that I've been talking about, saying, okay, this additional spending, it could work, it could increase the Canadian economy, but it's a huge increase in terms of the risk of more monetary expansionism, more growth in housing prices, because when central banks get involved and print a bunch of money to bail out the bond market, when that eventually will happen again, as we take on more and more debt, making ourselves more susceptible to that, that is when you have the rising wealth gap, expansion in the wealth gap, destruction of the middle class, elites and people who are not able to have exposure to asset classes that grow in those types of situations. I think that that's where you gotta hone in on. Maybe I'm wrong. Let me know if you think that I'm wrong on that assessment. That this focus on the carbon tax is actually the right way to go.
Saying because they're robbing Peter, they're able to pay Paul. We're not better off as a country when that happens. What we'd like to see is get rid of the industrial carbon tax altogether. We don't need, we used to live in a country where investors wanted to come into our country because we had lower tax rates and stable regulatory regimes. 10 years of Liberal government has made it virtually impossible to get anything built in this country. The only way that there's even a glimmer of hope is with a piece of legislation that allows them to bypass some of those projects just for the ones that the Prime Minister himself supports. So we've gone from a country where investors decide based on market conditions to politicians pick. That's not a sustainable way to grow an economy.
That's better.
There's really nothing in here, though, that you can see on the face of it that would do exactly what you're spelling out. And just to push back, with respect on the idea that everything that was done in the last 10 years led to a flight of investment, that wasn't true. FDI increased largely over the 10 years. In fact, investment in the oil sector increased as well. I know your argument's going to be, well, it could have increased a lot more.
But the government had to spend billions of tax dollars to rescue TMX. That would not have happened before this Liberal government took office.
Yeah, but before that Liberal government took office, there wasn't a panacea of pipelines being built.
We had 4 major pipelines in the previous Conservative government, including
decreased the differential to the same degree.
Tidewater. We approved Northern Gateway. That was the pipeline that would have opened up Asian markets. That would have allowed us to sell our energy into China, into Japan, into India, all kinds of growing economies in Asia. The Liberals canceled that, and Mark Carney gave a big thumbs up and applauded Justin Trudeau when he did that. Look,
I'm just pointing out, it wasn't like a dearth of investment. It wasn't a total there's nothing going on, and therefore anything they decide to do that builds on that this time around is inherently wrong.
Well, we have to look at the impact on this budget on Canadians. So what we see is an even bigger deficit and debt, and we know what that means. When you carry a balance on your credit card, you see what that interest does. That comes right out of your monthly income. That's exactly what happens with government. This is not sustainable. We've had the Parliamentary Budget Officer, even the Bank of Canada governor, ringing the alarm bell that this is not sustainable. The government is now saying that they're going to borrow even more money than Justin Trudeau. They're going to have to go out into the markets and borrow billions and billions of dollars. That means that every other Canadian that has to renew their mortgage, buy their first home, get a small business loan, has to now compete with the government for borrowing that money. Mark Carney's increasing direct program expenses by $25 billion over Justin Trudeau's last level. So this is a government that has come in after, Mark Carney as a Prime Minister has come in after 10 years of massive deficits, ballooning government bureaucracy, and said the answer is even more.
Okay, I'm out of time, but I think, am I safe to convey to Canadians that your party will not support the budget?
We cannot support a budget that tells Canadians that they have to sacrifice even more. We can't support a budget that doesn't have any affordability measures to bring down the cost of things like groceries.
Okay, I have to leave it on that note, Mr. Scheer. I appreciate your time as always. Thank you, Conservative House Leader Andrew Scheer. We'll take a quick commercial break here on the special.
Okay, so interesting stuff. We've seen a lot in this budget. Surprising in a lot of ways, not so surprising in others, concerning in a lot of ways, and positive in some others. Like I think you'll have a lot of people going one way or the other on this. Maybe I'm just too centrist on this. I think that there could be some positive outcomes from some of these policies, but I don't know that outweighs my concerns about the increased deficit spending. I think it's a concerning precedent, especially the separation of the operational and the investment budgets, and looking at those and saying, okay, we are fiscally sustainable as long as we increase investment but lower our operational costs. I think that that's a false narrative. It's an accounting trick. I don't like it. I don't think that it puts any kind of anchor on our future spending. All of this getting back to my chief concern that this will increase the divide between people who own things, an ownership class, and a not wealthy non-ownership class. This is my biggest concern about the future of Canada, is that these types of policies could make it more likely that we see more monetary policy that results in this kind of separation, which is upstream from all of the major issues in Canada. I think that it's a large part of the fertility problem in Canada, like the low birth rates and the low family formation, because of affordability issues that I think have been largely spurred on by monetary policy. And I think that downstream from that is our reliance on immigration as economic policy, bringing in more and more people to Canada to prop up the economy, to grow the economy, growing the GDP through adding workers rather than increasing productivity, as a result of also these demographic challenges that I think are tie back to monetary policy, right? This is why I talk about the housing crisis, right? We saw all the assets go up in value. They didn't really become more valuable. It's just that the dollars that buy those assets became less valuable. This is my chief concern. Maybe it's a little bit pedantic or a little bit specific, but this is what I start to think about. Maybe I got a little bit red-pilled when it came to this throughout the pandemic, but watching it, that's my chief concern. Although the way out of it is increasing our productivity. So to the extent that this budget helps to increase productivity, business investment in Canada, a business is investing in new technologies, new machinery, these things that this supercharged productivity tax write-off, the 100% tax write-off in that one calendar year when you make that investment, that's a big deal. I think that it's going to lead to more investment in infrastructure, more investment in equipment, more investment in R&D. If it's implemented in the right way, this could help us dig out from this hole, increase average wages, and make businesses more productive. That's why I like some of the things in this policy. Now, that will certainly mean that the government makes less because they are not collecting as many tax dollars from these corporations. Sure, but I think that it's less important that the government collects more and more money, even if that does marginally decrease the debt and decrease the deficit. I think it's less important that the government collect all of that money from the corporations, and more important that these corporations are incentivized to invest, incentivized to become more efficient, hopefully with immigration changes, incentivized to compete for Canadian labor. Do not rely on adding more workers to grow your company, but individual workers that are paid more per worker, but you will become more productive by investing in equipment, by investing in technology, R&D. the only way that I can see out of this growing and growing wage and wealth gap is if you have people actually competing for labor, people increasing what they can pay to each individual worker, not through adding people to the economy, but by making that economy more efficient. Productivity. To the extent that that's in this budget, I like those parts of it, but it doesn't outweigh my concerns about the increased spending and how, while that helps the productivity situation, we could find ourselves in an even more challenging situation in terms of multiple classes in Canada, in a widening of those classes, because ultimately I think that's the injustice. Now, in my day-to-day life, I'm planning for a future where these wealth gaps increase. I wish I wasn't, but I'm kind of at the point where I'm like, I think that that's more likely. The wealthy in all countries around the world have the most power, and I think that they are incentivized to keep the current system going as it's going. So to the extent that I believe that's true, I think the move is to try to make as much money. This is all stuff that's redundant and is easy to say and hard to do. Make as much money as you possibly can. Reduce your expenses as much as you possibly can, and invest as much of that money, the money that you don't need in the short term, invest it in assets that will grow in value. This is what I think over the long term. I'm a little bit skeptical in the short term on housing if we do see immigration numbers cut, if there is more monetary expansion, then I think that housing will go up in value as well too over the long term. You never know on a short 3 to 5 year basis. But that's the way I'm thinking about things. It might be a little bit cynical, but that's what I think. Now, if you haven't already, subscribe to the channel, because over the coming days, more analysis on this budget, what it means for Canadians. Some of these thoughts may be refined. More information on that Liberal MP, Conservative moving to Liberal MP. Will that mean that we shift into a Liberal majority government? Well, if they can get a couple more people to flip it, it's a possibility. That's something that's going to be interesting to follow. Subscribe to the channel, like this video. I appreciate you all tuning in. More to come on analysis on this, so stay tuned to the channel. On that note, I'm going to finish up the stream here. Yeah, subscribe to the channel, leave comments on the videos. I try to get back to as many people as I can. And with all that said, thanks so much for tuning in, everybody. I hope this stream helped you out at least a little bit, and I'll see you next time. Have a good night, and I'll see you soon. All right, have a good one. Bye.